Good evening, students. How are you all? I'm sure you all would have had a great festive season, and even till now, many of you all would be still in the celebration mode. But no worries, पढ़ाई और enjoyment दोनों साथ में चलना चाहिए, and in fact that makes your work pressure less, and also it increases your zeal in whatever you do. So, with all the best wishes for this beautiful festival, let us start with our next topic in customs, which is also common to other taxation laws, that is refund. Whenever you talk about any taxation, be it income tax or the earlier VAT, excise, or the present GST customs, there is always certain concepts which are may not be exactly same, but you will find similar concepts and maybe having similar provisions, one of exemption and the other of refund. Now, these are the two most common provisions which are there in taxation laws. Now, let us understand the relevance of this. Yes, today is also New Year, so wishing you all a very happy New Year. Yeah. So, as I was saying, so exemption and refund both are having very specific relevance in taxation laws. Why? See, if I have to talk about exemption, just to give you a small start and brief, generally, taxation laws are designed on two bases. One is the specific approach of taxation, and one is the general or comprehensive approach. When we talk about specific approach, it means the taxation law will list down those activities on which they want to levy tax, and only those activities which are listed will be liable to tax. This is the specific approach, which presently is not there in customs, in income tax, or in GST. In all these laws, we have the comprehensive or the general approach, whereby we first include everything in taxes. So, firstly, our charging section will cover all incomes, it will cover all sales, all supplies, all imports, all exports, everything. And then, whatever they want to give relief as of now, that is put in the exemption list, or like in case of GST, we have the Schedule 3. In earlier service tax, it was called as the negative list. So one is the exemption list and the other is the negative or the exclusion list. So we follow the comprehensive approach, and in the comprehensive approach, we carve out those cases where for the time being we do not want to levy tax. Similarly, refund is the other most common provision in any taxation law, which is applicable whenever whatever tax has been paid is found to be excess. Excess, then what is the correct tax liability? So whatever is your correct tax liability, whenever it is computed, either after the self-assessment or when there was originally a provisional assessment, when afterwards a final assessment is made, or later on there is any assessment by the department, or in the course of appeal, or maybe under any type of court orders, it is found that your actual tax liability is less, but you had paid higher for some reason of either wrong assessment or provisional assessment or under protest, then the amount which is excess, the government is legally, constitutionally not empowered to keep even a single rupee, even though paid by the name of tax, which is beyond the correct tax liability. So first understand this. See, Article 265 of the Constitution lays that no tax shall be levied without the authority of law. One line article, simple. Now, any tax to be levied should be backed up by the authority of law, and the laws are passed by the respective parliament, either at the central level or at the state level, that is the central parliament, Lok Sabha, Rajya Sabha, or the state legislature, legislative assemblies. Now, importantly, where any amount of tax which is paid by you and me is found excess, it means it is going beyond the law which has been passed for that particular tax. And once the tax amount which you and me have paid is going beyond the amount which is provided in the law, it means that excess amount of tax supersedes or goes beyond the powers given in Article 265. In other words, even a single rupee of tax extra paid by you or me, even though paid by the name of tax, cannot be retained legally, constitutionally by the government. And then comes the role of this topic, which is the refunds. So the basic idea and purpose of refunds is to ensure that wherever, either by mistake or under protest or temporarily, any tax was paid and later on it is found to be paid extra excess, it should be refunded back, because government has no constitutional powers to retain a single rupee of extra tax paid. So this is the origin of the chapter of refunds in all taxation laws. Now, having said this, there is going to be another very interesting concept which we are going to discuss in very great detail in this particular topic. That is the concept of unjust enrichment. I'll just give you a brief, because anyways, we are going to discuss that concept in detail. Whenever we talk about indirect taxes, and why only indirect taxes? Because only in case of indirect tax, the tax burden is shifted to the consumer, to the buyer. So even though as a seller or supplier today, I am charging the tax, I am going and deposit. There is a very interesting point that I just explained you, why government cannot keep a single rupee of tax, because it is not legally, constitutionally empowered to do so. In the same fashion, if you are getting a refund which is actually not going out of your pocket, that will be unfair, that will be unjust, and it will be unfair in what sense? You will be enriched. Enriched means you will be getting some extra money, and it will be unfair, unjust, because originally the money did not go out of your pocket. Yes, maybe at the start you had paid it, but because it is an indirect tax, you had passed on the burden to the respective consumer, buyer, whoever has bought your goods or services. Now, the law is so particular about this point that in case of indirect taxes, whenever a refund is due, one, government cannot keep the refund amount, that is for sure, because of Article 265. Similarly, it should be refunded to us, but within us whom? Whether the supplier, or in case of customs, let us say whether the importer or the person to whom these goods are further sold by the supplier or by the importer, or the services supplied by the supplier. Now, in such a case, the law is so minutely and very pinpointedly crafted that it wants to ensure that no amount of tax should enrich anyone unfairly, means that the person from whose pocket this tax was not gone, the person who did not bear the burden of this tax, should not get the refund. This is the concept, principle of unjust enrichment. We call it as the theory of unjust enrichment. Now, interestingly, a question arises as that, let us say I am the supplier, I am the importer. I have done all dealings with the authorities at the start, because I filed the returns. I filed all types of bill of entry, shipping bill, everything I did, and I only paid the tax. And after, let us say, 2 months, it is found that this tax is refundable because it was wrongly paid excess. Not maybe entire tax, maybe part of the tax, whatever is excess is refundable. And now you are saying, "Ki, Vishal, you cannot get the refund because of the theory of unjust enrichment." I just explained, neither the government can retain it because of Article 265. Then the question is, then what will happen of this refund? You will not give me, because I am not bearing it. Also, it is interesting that maybe the consumer or customer to whom I have sold these good services may not be traceable. Then how will you deal with this refund? Now, whether in such cases can the government keep it because we are not traceable? Answer is no. Article 265 will never permit it. That is why, in case of indirect taxes, we have a concept called as consumer welfare fund. This concept of consumer welfare fund states that whenever a refund is due, one, government is out of picture, it cannot keep the amount, because once you say that the refund is due, it means it has gone out of government's powers, and because of Article 265, they cannot retain it. Now they will try to identify, locate the person who has borne the duty burden. If I claim I have borne the duty burden, I have to give that proof. Once this is done, I'll get the refund. But if I'm not able to do that, in that particular case, the amount will be transferred to a special fund called as Consumer Welfare Fund, which would be then utilized for the benefit of consumers in general. Like you would be finding many ads going for consumer benefits, many promotional work done by the government for a consumer benefit. So that fund will be utilized exclusively for that. I'll try to link it with something which you may have studied somewhere else. What is the place where you have studied this new concept, which I'm just going to link our present concept with this? It is the concept of investor protection fund. Investor protection fund you would have studied when you were studying the chapters relating to shares in the company law, or maybe even in accounts, or maybe even in audit. May not be account, but in audit. Now, the question is that what is the similarity between what I just explained and what is this new point? The answer is the similarity is that in case of consumer welfare fund, as I said, the amount will be going to this fund and it will be used for the benefit of consumers. In the similar fashion, if there is any unclaimed dividend, in that particular case, after 7 years, the company has declared the dividend, but there is nobody to claim the dividend. In that particular case, the law says it will be transferred to a special fund called as Investor Protection Fund. And again, this fund will be used only for the exclusive benefit of the investor awareness. So this is how the concept of what I just explained, that is the consumer welfare fund, is linked to another concept which you have already studied, that is investor protection fund. Now, Hemant has asked me, sir, if such is the case, then nobody will ask for refund. See, Hemant, see, there is nothing wrong in asking for the refund. Whether you get it or not, that is a different point. But if you believe that the refund belongs to you, you have all the rights to ask for it. There is no problem in asking for the refund. Maybe after the investigation analysis, it may be found that the refund does not belong to you. Fine, it will go to the consumer welfare fund. But if you believe that you have borne the burden of the tax, you can always claim or demand for the refund. So there is no point that nobody will ask for refund. You may not get it. That is a different point. Fine, beta? Okay, great. Anybody has any questions on whatever we have studied till now relating to the basic of refund and the concept of unjust enrichment, consumer welfare fund, and the entire constitutional background of how refund concept has got its place in the taxation law? Now, these are the different aspects that we are going to study in this chapter. So, our module has been designed in a very comprehensive manner. So, and also they have simplified it, also highlighting the important points. So even if you are studying the module thoroughly, there is nothing beyond that. So this chapter will be studying from the module, plus also towards the end, I will take you to the BEAR Act also, because I want you all to have that habit of reading the BEAR laws. So that will do. But since this is more means not only a law is there, there are many other points to be understood in this. That is why we'll first study from the module which has more details, and then for our understanding purpose, we'll also go to the Customs Act. So what are we going to study? Application, processing, unjust enrichment doctrine, interest if the refund which is to be given is given late. Then in case of refund of export duty, refund of import duties. So this is broadly what this chapter covers. Now, as I just explained, wherever any excess amount of duty has been paid, then in such cases, refund of such excess can be claimed by the person who has paid this excess amount. Whether who is going to levy customs, IGST, sorry, whether it is the GST law or it is the custom law. And if you remember, students, when we were discussing on Mamta's question, I had explained through section 5(1) proviso of the IGST Act, that as per section 5(1) proviso of the IGST Act, which is the charging section of the IGST law, it says that in case of import of goods specifically, they have carved out saying that the levy, the valuation, the time of supply, and the manner of collection, everything will be as per the customs law. And that is how we come to the customs law when it comes to the levy, it comes to the valuation, it comes to the assessment, and it also comes with the time of supply or the time at which the duty has to be collected. Now, students, please understand, it is not that everything relating to import of goods IGST is shifted to customs. Only these things: levy, the manner of collection, the valuation, and the timing. But refund may not be shifted to customs law because that is not specifically provided. Now the question is, what will happen for refund of IGST where your goods are exported? So here, as you can see, I have already marked it. In this particular case, wherever goods are exported, there are two options. This is what we are going to study in the GST subject. Whenever goods are exported, they may be exported either with payment of IGST or without payment of IGST, which is by giving LUT or bond. Now, in this particular case, when goods are exported with payment of IGST and you file the shipping bill and you upload the details in your GSTR1 and then later on 3B, you get the refund automatically because the GST portal connects with the customs portal, which is the IceGate portal. And if the details uploaded on the IceGate portal, that is a custom portal about the shipping bill, about the EDI and all those details is matching with what you have posted in your GSTR1, then the refund comes to your bank account automatic. However, where you have exported without payment of IGST, that is under the LUT option, in that particular case, you have to make a specific application for the refund of the duties of GST that you have paid on the input side. Because on export, that is the output side, you have not levied IGST, but still section 54 of the CGST Act, read with Rule 89, provides for the refund of the GST, different GST. When I'm saying GST, it means CSI, anything paid on the input side, that is on the inputs or on the input services, that you can get refunded. But now here, this refund application is filed exclusively under the GST law, and hence that refund processing is done by the GST officers. So as you can see, if goods are exported on payment of GST, that is the IGST, refund of such IGST shall be processed by the customs department, but this is automatic. You need not go there. Yes, but where this refund is stuck, many times it gets stuck for various reasons. Only in such cases where the refund is stuck at that time, for resolution of that, for the solving of the problem of why my refund is stuck, and you want to get any type of clarification in that, only in that particular cases, you will go to the customs department. That is the place from where the export had happened. I hope this is clear. But where your goods were exported without payment of IGST, in that particular case, the refund of the input side, that is the ITC that we say, will be only granted by the GST department, and you have to file the refund application online, and all the further correspondence and all the filings of all details, etc., happens with the GST department and not the customs department. Now, here we are not talking about the IGST refund because, as I just explained, either it would be by the automatic route or second, it would be by the GST route. Then what refund we are over here talking about? We are over here mainly talking about the refund of the customs duty, that is the import duty, and wherever in few cases export duty is applicable, and if you have paid those export duty in excess, that refund. So here we are only limiting our discussion to the refund of the import duty or of the export duty, as the case may be. Now the section which is applicable for refund is section 26. I'll just show you the bare law also for your reference. So we have section 26, refund of export duty. Then we have section 26A, refund of import duty. And then we have the procedure for claiming this refund, which is under section 27. So broadly, these are the only three sections which we are going to discuss. So our module first starts with the application part, that is the procedure of claiming the refund. And then we'll go to the section 26 and 26A, which deals with what type of duties can be refunded. I hope this whole thing is clear. So you now have a broad idea of what we are going to study in this. Anybody has any questions or doubts, please feel free to ask. So I can wait for a minute. If you have anything to be asked in specific, okay, Ginny is saying no doubt. Anybody else? Okay, Hemant is also saying no doubts. Good. Chalo. Then let us proceed if you all do not have doubts. So as I just explained, we have three sections to understand, out of which we are starting with the first section. That is, we are going to the application or the procedure part first. Section 27, what it says? It says, person who can claim refund of duty or of interest. So this is interesting that even where you have wrongly paid interest. Now, why this will happen? Let us say you paid some duty. Later on, there was some assessment by the department and they claim that your duty payment was short. So you paid the difference duty along with obviously interest that they will demand. And you went in for some appeal. And in appeal or by some court decision, this amount which was extra paid by you because of some departmental action is allowed to be refunded back. Obviously, they will also allow you to take back the interest because you had paid that interest also on the basis of the same assessment, right? So let us understand how is this particular refund happening. So what it says, person who can claim the refund. So answer is simple, the person who has paid the duty or the person who has borne the incidents. Now, obviously, it is the later one first. So not only the person who has paid, it is mainly, please pay attention, it is mainly the person who has borne the duty. So it is not only the person who has paid, it is the person who has borne the duty. That is the person who is eligible to claim the refund, right? Now, how this will happen? Now, again, I repeat, we are only over here talking about refund of the import or the export duty. Here, we are not talking about the refund of the IGST that you are going to study in detail when you study the GST portion. Okay. Now, how does this refund will happen? So first point, it says you have to make application for the refund in the specified forms. Now the question comes, by what time this refund application has to be made? Now this is the most crucial part. See students, in taxation law, what is very important is a word called as compliance. This word is very, very critical. You talk about any taxation law. What is compliance? Compliance is adhering to the respective due dates. First comes the due date of filing returns. In GST, we have so many returns. Second comes the due date of filing various forms. Like in case of customs, we studied that the goods have to be cleared from your port within 30 days. So by default, you have to file the bill of entry within a sufficient time so that it can be cleared. Similarly, the shipping bill. So all these documents, the returns, the payment of duty, everything has to be done within some predefined time limit. Now, ensuring that you comply with all the procedural requirements, that is submission of returns, filing of forms, and that also within the time specified is what is called as compliance. Now, compliance is a very, very important point in taxation law so that you do not lose out on any benefits or you are not saddled with any type of penalties or late fees. So that is why compliance is very important. Now, for refund, since you are demanding a benefit, please understand students. Sorry, there was a loud noise of crackers. Sorry. So I was saying, since refund is a benefit that you are demanding from the government, it is even more important that you file the refund application in the correct form and also within the correct time limit. Now, students, let us also discuss on one very important concept since we are at the final level. See, when you enter into practice or whether you take up job and you are in the taxation field, there will come a time when one, either you follow what is given in the law or two, you decide to challenge what is given in the law. Now, many times we in litigation decide to challenge what is given in the law, and many times we raise the constitutional challenge. Like I'm raising this point because what we are going to discuss now is the best example. Like the law has put over here 1 year time limit to make application. Now, many times it so happens that a person may miss this deadline. A person may not be able to file the application for refund in timeline, and after the timeline has elapsed, after a few months or a few days, the person makes a belated application, which is generally rejected. Now, obviously, when anything is rejected, when anything is not in your favor, the first option you have is appeal. However, you do not want to go into appeal, because again appeal will be application of the law only. The appellate authority, what they will do, they will again check whether you followed the law or not. If you have not followed, they will simply reject your appeal. So what you decide to do is, or what you may decide to do is, you may decide to challenge the law in the first place, whereby you say that putting such a time limit in the law itself is unconstitutional. So whenever you are in taxation field, two things in litigation you do: either you discuss, interpret, and go against the law. Sorry, not against the law. By way of interpreting the law, you challenge. Or second is you denounce the law and you challenge the validity of the law. Now, many times in the past, many such cases have come where people have went in for writs challenging that this time limit of 1 year itself is unconstitutional. Now, here it is 1 year. In GST, the time limit is different. Every law has a different time limit. However, let me inform you, students, it has now been very clearly held by Honorable Supreme Court in Katinov judgments that you cannot challenge whatever procedural compliances are given on the simple grounds that it is unconstitutional, it is going against Article 14. That challenge is not acceptable. So just keep this in mind. I'm sure that maybe you may not be able to link it much because many of you may not have studied constitution, but students, it is my duty as a faculty that I should keep you aware of these concepts. If you want, you can raise some doubts, we can discuss. Because anyways, our today's topic is very small. It is not a 3 hours topic. So fortunately, I have some question to discuss on some these additional pointers. So if any of you want to have some more discussion on any of these pointers, please let me know. But remember this, when you will proceed in your career in the taxation domain, one, either you'll go by the interpretation of the law and you'll go into appeals at various levels, or you will go by challenging the law. But remember one thing, students, many times when we challenge the law, we challenge, or we may challenge on the ground that the law is incorrect because it cannot put such a time limit. But let me inform you, no such challenge would be acceptable, because it has now been a settled position that the lawmakers have all the rights to bring in procedural compliances with certain deadlines, with certain restrictions, and they have to be honored. Even the honorable courts will not step into to say that, okay, 1 year time limit is incorrect. That will never happen. Yes, maximum relief, what honorable courts have given specifically when you are challenging the principle of natural justice in the writ courts, is that where you can prove that because of some genuine reasons, you were not in a position to make the application within the specified time limit, and it is going against the principle of natural justice only in those exceptional circumstances, and that also in very limited number of cases, honorable courts have said that, okay, no problem. We are not saying that this 1 year is incorrect. That is correct. But applying the principle of natural justice, we will allow you to file your refund application even beyond 1 year. So just remember this. This will definitely hit you whenever you are into the taxation domain in much detail. So whatever I've explained just now, just keep it at the back of your mind. This will be very helpful. So coming back to the point, so we were discussing what is the time limit. So the time limit put in the customs law for making the refund application is 1 year. Now here comes two most important questions. First, 1 year from what date, and how this 1 year would be computed. So let us understand this. What it says, a claim by the importer exporter for the refund of duty or interest, whatever you are demanding, must be made before expiry of 1 year from the date of payment of such duty or interest. So whatever excess duty or interest you have paid, the application for refund of such excess duty interest could be filed within 1 year, and 1 year would be counted from the date when you paid. But this rule is applicable for the importer exporter, who is the person who has paid the duty. However, as we discussed at the start, it may happen that the goods have been sold by this importer exporter in future, and the tax burden has been shifted by them and recovered from their buyers. In such a scenario, the buyer is the person entitled to make refund application following the principle of unjust enrichment. I hope you remember that. Anyways, we are going to discuss in detail also. So following the principle of unjust enrichment, the buyer is the correct person who is eligible, entitled to get the refund. In such case, the buyer would be able to get the refund by filing the application within 1 year. Now, this 1 year for buyer would be starting from the date of purchase. So for the importer exporter, it is the date of payment of the duty. For the buyer, it is 1 year from the date on which the buyer purchased such goods or goods only. Sorry, here services cannot come because we are talking about customs. Okay, I have two questions. So normally interest is not part of acquisition cost of the item or time. I'm not getting him. Further, Hemant is saying in the case of refund of interest, there is no enrichment. Yes, you are right, Hemant. That is why they have said duty or interest. So it may happen that in case of duty, the burden is shifted, but interest may not have been shifted. That is why. So you are very correct, Hemant, that there is a very good possibility that for interest, there is no question of enrichment because interest always you will be paying out of your pocket and maybe you may not be recovering from the buyer. Correct, Hemant. But still, I'm not able to understand your previous question. So you are asking in your previous question, so normal interest not part of acquisition cost of the item. Acha, I think you mean the same, what you have answered in this fund application. Yes, it is 1 year limitation, but how this 1 year limitation will apply in some special scenarios, that is what we need to check. So first special scenario is exemption of duty by a special order. So what it means, let us say you have paid some duty. Later on, you get to know that the government has passed a special order by which they have exempted this duty, and this order says that this duty exemption will apply from a particular date, and you have already paid duty within that particular date. It means your case is fitting in this particular exemption. But as we all have studied, you may have made the bill of entry application at the start, or maybe your bill of entry application was processed. You paid the duty because you wanted to get your goods cleared faster. Now, in such cases, maybe either you did not pay attention to the exemption notification or the exemption notification had come later, but the applicability was made retrospectively from a particular date. In such cases, when the refund becomes due, the period of 1 year would be counted from the date of issue of such exemption order. So here, when any exemption is given by way of an order, which generally happens in specific type of exemption. See, there are two types of exemptions: general, which is by notification; specific, which is by special order. So when any exemption notification, or here in this particular case, a specific exemption is given to you by way of a special order, and let us say the order is passed at a later, now I become eligible for refund. Maybe on the date of payment, since this exemption order was not there in place, you were not having any scope of refund because you were not entitled. The duty, whatever you were paying, was correct. But later on, when this exemption notification order was passed, you became entitled to refund from that particular date. So very logically, the law has carved out this special scenario that in this particular case, your 1 year time limit for making refund application will be counted not from the date of payment of duty, but from the date on which this order was passed. I hope this is clear, students. Next, where the refund is arising. Why or on what basis? On the basis of any court judgment or any decree or any order or direction of any appellate authority, appellate tribunal or court. So your matter has gone into appeals or you went into court, and on the basis of the judgment or order or decree of these appellate authorities or court, you are now entitled to refund. Now it may happen that your duty payment was 4 or 5 years back. Your matter you had brought into appeals, and the appeal is now running for 4 or 5 years, and after 5 years you got this decision. Now, if you apply the original rule of 1 year from the date of payment, it has already lapsed. So you will never be able to get the refund. In such a scenario, to address such a specific situation, the second carve out made is that in case where the refund becomes applicable or you become eligible for refund on the basis of any such order, judgment, decree, then the period of 1 year will not be counted from the date of payment, which may be some 4 or 5 years back. It will be counted from the date on which such judgment is passed. So obviously, again, this is very logical. See, students, you should always try to understand the logic of the legislature. That is the intent with which the particular provision has been crafted. The moment you try to understand the intent, and if you are able to comprehend the intent, remembering the provisions and even recalling during exams become very simple. I hope so this is clear. So this second specific scenario is because In this particular case, the duty payment may be very prior and the 1 year may have already elapsed. So you should not miss out on the refund. And anyways, you were not knowing what would be the decision of the honorable courts or the tribunals. So the date of the order of the courts or the tribunals would be the date for counting the 1 year period. Then students, if you recall our procedural chapter, in procedural chapter, we had studied this concept of provisional assessment. I'll just repeat for your revision and in case somebody has missed out or is not able to recall. So whenever imports are made, there is a possibility that the importer is himself not able to make the self-assessment as required under section 17. So he or she is not able to make that assessment. Now, in such a scenario, Section 18 of the Customs Act provides an option to the importer that he may reach out to the respective customs department, custom officer, seeking their involvement, their assistance in making the assessment. Now, it may not be even possible for the custom officer to give you upfront the correct value, the correct rate. So what the custom officer or the department will do, they will give you a temporary rate or value in which you are having a confusion so that you can make a temporary, that is provisional assessment of your duty. You pay that much duty. Also, they will ask you to give a particular amount of bond to cover the difference in duty which may arise on final assessment. So right now you are paying a provisional amount, you clear your goods, and in due course when you provide them more details and they are able to make your final and correct assessment, they will give you the final assessment. Now let us say the original assessment was made at 18% and later on it was found that it is only 10%. So you have paid 8% extra. This 8% extra will be now eligible to you as refund, obviously applying the principle of unjust enrichment, assuming you have not passed on the duty incidence because the goods are still lying with you. In such a scenario, you are entitled to get that extra duty paid as refund. Now, again, the question is that 1 year period for making the application of refund. Now, if you think about the scenario logically, will not be the date of payment. It will be the date of your final assessment. Because only then, that day you got to know that, okay, my original duty was wrongly paid, excess. Now I am eligible for refund. Similar may happen if your case falls under reassessment. So when your case is the case of reassessment, that is what duty was originally assessed, you felt it was correct, but later on departmental went for review and there was a reassessment of your duty and it was found that originally the duty paid was excess. The excess would be entitled for refund, and this refund date of 1 year for application would be counted from the date of this reassessment. Fine. So, Ginny, you are asking, sir, under which circumstances special order is issued? Ginny, beta, see, exemptions, as I was explaining, is of two types, and this is now common with customs and GST, so you can understand it from both perspective. One is a general exemption, one is a special exemption or a specific exemption. What is a general exemption? Where I say hospital services are exempt, like I'm talking about GST law. So, when I say hospital services are exempt, it is exempt for all hospitals, whoever fit in the definition of the services which are given for that particular exemption entry. That becomes a general exemption. However, when I say a particular hospital giving a particular type of service is only exempt, that becomes a special exemption, which is generally not given in normal scenarios, because then it would be unfair. It would be making classification between different businesses and it may not be taken in the right sense. So generally, generally, such type of special or specific exemptions are very rarely given, but many times in public interest, where the government feels like, let us say in COVID, it happened that a particular company is only manufacturing the serum, and the government wants that the serum should reach out to people at a very low price. It may give a specific exemption only to that company or only to those imports. So when the exemption is not applicable qua the goods, it is applicable qua the import or qua the importer. That is, it is very specific to one person or one import. It becomes a special case of exemption. And that exemption is one-time exemption or it is a time-bound exemption. So it is given by a order so that there is a limited applicability validity of that exemption. So Ginny, I hope I could answer you. You have any doubts in this further?
Yes, sir, clear in this. And I have one more question also.
Go ahead,
Re
beta.
Regarding sir this, please sir 7.3 पेज निकालिए ना प्लीज.
हाँ हाँ, बोलो बोलो बेटा. And please, you can ask in your language, not a problem. Tell me.
सर इन दिस इवेंट में जो थर्ड नंबर का था, पेमेंट, प्रोविजनल पेमेंट, तो
Yes.
इसमें आपने जो बताया कि जो भी एक्सेस पेमेंट है वो रिफंड मिलेगा, तो इसके अंदर हम जो वेयर हाउसिंग के लिए जो हम थ्राइस पेमेंट का जो बॉन्ड हम देते हैं, तो उसमें उसका भी रिफंड इसमें इंक्लूड होता है?
बेटा आई थिंक लास्ट टाइम भी हमारा इस पर डिस्कशन हुआ था और शायद आपका ही डाउट था. मैं वापस रिपीट करूंगा बेटा, वो 3 टाइम्स आपने नहीं लिया आपसे. अब कल अगर आपका ड्यूटी असेसमेंट के बाद पता चलता है कि वो अमाउंट कम है, तो सिंपली आपका सिक्योरिटी या बॉन्ड उतने से कम हो जाएगा. देर इज नो क्वेश्चन ऑफ रिफंड, क्योंकि आपसे उतना पैसा नहीं लिया गया. सो द 3 टाइम्स वॉज नॉट recovered from you, it was only a security taken from you. I hope I am able to answer you beta.
यस सर, नाउ क्लियर सर, थैंक यू.
ये लास्ट टाइम भी शायद आपको डाउट था, हमने इस बारे में लास्ट टाइम भी बात किया था कि
नहीं
ये
सर,
पे नहीं
मैंने
करते हो आप.
एक्चुअली नहीं किया था.
सॉरी.
यानी मैंने ये वाला क्वेश्चन
नहीं
नहीं
नहीं,
किया
ये
था.
किसने किया था वो आई ऑल्सो डोंट रिमेम्बर, बट दिस वाज अ डाउट विच वाज रेज एंड आई हैड मेड दिस क्लियर कि वो 3 टाइम्स हम पेमेंट नहीं करते बेटा. द थ्री
ओके.
टाइम्स इज ओनली दी सिक्योरिटी, कि आपको 3 टाइम्स जितना ड्यूटी असेस हुआ है उसके 3 टाइम्स का जो अमाउंट आएगा, जो वैल्यू आएगा, उतने का आपको एक सिक्योरिटी देना है बस.
ओके सर, ओके, क्लियर
फाइन
सर.
बेटा. ग्रेट.
थैंक यू सर.
Anybody else has any doubts or questions, please feel free to ask. Anything relating to time limit, these special scenarios in time limit. Yes, Vignesh, you are very quiet today. Normally you have good questions. Mamta. Okay, Vignesh says no doubt. Hemant says no doubt. Okay, let us proceed then. Now comes the next very important point, students. Kindly remember this. This is again a concept which is very much useful, applicable whenever you are in litigation. That is payment of duty or tax under protest. Let us first understand this before I explain this point. What is payment of duty or tax under protest? See, it may happen that the department has raised a notice on me, or during some audit, it has created some audit objection asking me to pay tax at a higher rate. So let us say, I'm just giving an example of GST because I believe GST all would have done in your offices. So you can connect with GST example more. And anyways, these points are common with both income tax, GST, earlier excise, VAT, etc. So what is this point? So let us say you had paid some duty. Yes, Hemant, you're right. So you had paid some duty, let us say at 12%. But when the department made your assessment or audit, they said, no, 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 this is incorrect. The correct rate is 18. Now, what is the choice you have? The choice you have is you can litigate. But for litigation, many times when you are going in for litigation, either you voluntarily or it is the requirement of the law that you first pay the amount. Now, when you are paying the amount and then going in for litigation, it is called as duty paid under protest. So when you are protesting it, that is you are not accepting the liability, but for the time being you are paying it, maybe just कि भाई आपको अभी फिलहाल कोई हेडेक नहीं चाहिए, क्योंकि अगर आप अभी पे नहीं करोगे तो जैसे जीएसटी में होता है, दे में ब्लॉक योर इनपुट टैक्स रेट लेजर, दे में ब्लॉक योर बैंक अकाउंट, they may put you more notices and it may create a big problem. So maybe you can say, okay, for the time being I am paying, but I am not agreeing to this. This is what is duty paid under protest. Now, just let me inform you one thing very important. There is no specific provision under the GST law. Act में या rule में GST के कहीं पे भी they have not provided for payment of duty under protest. It is by common practice. However, under the earlier excise law, under the customs law, there is a specific provision which allows you to make payment of duty under protest. So under the law itself, in the customs, in the previous excise, you have the reference of duty payment under protest. However, under GST, there is no specific reference under the law. However, by general practice, and maybe you can say, since it is your right to make payment under protest, using that constitutional right, we are still taking the stand that under GST also we are paying duty under protest. Fine. Now, what is this point? That when you have paid duty under protest, following the procedure given in the customs law, and tomorrow when when you are going for claiming the refund. So let us say, as I said, ki for the time you are paying the duty, you have not accepted it, you want to contest it, and later on, whenever it is proved or it is accepted by the department that your duty payment, which was under protest, is accepted, it is not correct, so we are ready to give you back the duty. In such cases, the 1 year limitation does not apply. So, what is most important? Here, the refund claim may be filed without any time limitation. So, there is no time limit for making this duty payment under protest refund. So, if you want to get this refund, you can apply it without being bound by the 1 year deadline. Again, another important provision which is provided that where the refund claims are very low, here they have kept the amount of rupees 100, which I believe is really very low. They may increase this amount. They should have increased because this is a very low, a very old figure continuing in the law since so many years. Now they can make it up to 500 or even 1,000, but fine. So the law provides that if your refund amount is not exceeding 100, so it is as low as 80, 90, 95, 60, 70, we will not entertain the refund application in the first place. In short, they are politely saying, please don't apply for refund where the amount is such low that our procedural compliance costs would be high. So, refund application below 100 are not allowed in the law itself. Further, what they are saying is, now, whenever you are making refund application, please prove one, how refund is applicable, two, why refund is applicable to you and not to somebody else. So for all this, you need to produce relevant evidences. Majorly, these evidences would be documentary evidence. So whenever you are making refund application, now this, if anybody of you would have done in office relating to the GST, you would remember that along with GST refund application, we are supposed to file all types of documentary evidence of ITC or of exports, whatever the department demands. Similarly, in case of customs also, where you are making application for refund, you need to prove, as I said, two things. One, how refund is applicable to you, why refund is applicable to you, and why you are the person who is entitled to refund and nobody else. So for this, you need to produce the relevant documentary evidence. Now, this is the most critical part, hence I have also made it red. Now, again, the law itself provides for something which is very critical for us. Section 28D of the Customs Act states that the law itself is presuming. What it is presuming? That if you have sold these goods, the duty, the customs duty which is paid at the time of import has been passed on. Now, what is the impact of this? The impact of this is, if the law has presumed that the duty burden has passed on, it means you will never get the refund. Simple. However, it does not mean that you will never get the refund. It means that now the burden of proof is on the importer, is on the applicant to prove that, no, even if the law is presuming, law is not saying it is accepted, it is presumed by the law. So law is still giving you an opportunity that we are in the first place presuming that you have passed on the duty incidents. If you want to claim that, no, I have not passed on the duty incidents, it is now your responsibility. The burden of proof is on you to make us believe and accept that you have not passed on this burden. Now, this again is a very beautiful concept, students. In various taxation law, we call it as the concept of burden of proof. What is this burden of proof? This burden of proof concept says that whenever there is any allegation, if the department is putting any allegation on you that you have done some tax evasion, you have done some short payment, you have taken wrong refund, it is always the responsibility of the person who is alleging, who is allegating, to first prove that whatever he is alleging is correct. Then it is your onus to counter that, no, what I proved is wrong. So let us say I am alleging, I am the department, I am taking this stand, I am saying that you have made wrong payment, you have made short payment, you have taken wrong value, you have taken wrong rate, classification is wrong, exemption is wrong, anything. If I am taking this tax position, it is firstly my responsibility to prove that you have done this. It is not your responsibility to first prove that you have not done this wrong. It is my responsibility to prove that you have done this wrong. This is what is the concept of burden of proof. This has exception, like in GST, if the matter is relating to input tax credit eligibility. The law says, Section 155 of the CGST Act says, it is the burden on the assessee, the taxpayer, to first prove that the ITC claimed by him or her is correct. I can always put an allegation by saying that your ITC is incorrect. You have taken wrong ITC, either under the wrong head, or that 16(4) time limit is wrong, or supplier not pay tax, whatever. It is firstly your burden of the taxpayer, of the assessee, to prove me that why your claim is correct. But except that, for all other allegations like relating to value, classification, exemption, supply, everything, it is my responsibility to first prove why whatever I am saying is right and what you have done is wrong. You don't have to protect or shield yourself. Similarly, under the customs law, certain things are presumed by the law. So over there, the burden of proof is on you. Now you have to first prove this, because law has presumed this. What they have presumed this? They have presumed that in case wherever you are applying for refund, we will presume that the duty incidence has been passed on by you to your buyer. Now, if you want refund, if you want that the doctrine of unjust enrichment does not affect you, then firstly, it is your responsibility to prove with documents that you have not passed on the burden. This is what Section 28 doing in very simple words. Anybody has any questions on this? First, about the concept of burden of proof, and second, about this particular point, that they have presumed that the incidence has been passed on. Students, anybody has any questions on any of these two pointers? No? Okay. Now, once you have made the application in correct form within the time limit and along with the necessary documentary evidence, then comes the second step. That is, now the customs will start processing your application. What is processing? Processing simply means that when you make an application, they have to check whether your application is complete, it is correct, whether they have any doubts or queries for which they can ask for further documents or any type of more inputs or explanation. And after checking all this, if they are satisfied that yes, whatever duty you had paid originally or interest you had paid is wrong, it is excess, and you have not passed on the burden, they will be allowing you the refund. So before they pass your refund claim, this is the step which is called as the processing of refund claim. Now, in this particular case, the main point that we have to understand and discuss is the concept of unjust enrichment. Now, I already explained it at the start. What is this concept of unjust enrichment? First, if there is any excess payment of tax, government is in the first place unjustly enriched. Article 265 of the Constitution of India does not allow the government to retain even a single rupee of tax, which is not authorized by the law. And whenever any excess tax is paid by the taxpayer, it is always something which is not authorized by the law, because law has authorized only a particular value, a particular rate, and only up to that the tax payment is as per the law. Any amount paid extra, taking extra value or extra rate, or by denying exemption, will be over and above, or what we normally use the word ultra vires the law, and hence it would be hit by Article 265. So firstly, it is unjust enrichment on the part of the government to keep the amount of excess tax paid. So that is done, so government cannot keep it. Now it is your turn. You can get back the amount from the government, which is called as refund. But again, when it comes to your side, it is again the same doctrine of unjust enrichment, which creates a sort of hurdle which says that, wait, whether or not the tax which you are now claiming as refund is originally gone out of your pocket. It may have happened that you may have paid it because you are the importer exporter, but later on when you sold these goods, you included the tax in the value, and that is anyways presumption by Section 28D. So The law may presume, or not may, the law is presuming that you have added the tax component in the price of the goods. And when you recovered this price from your buyer, you even recovered the tax. So it means now the tax which you had originally paid is not going out of your pocket. The burden is now shifted by you to your buyer, to your customer. In this particular case, if now refund becomes eligible, you are not the right person to get the refund. And if you get the refund, it would be going against the principle of unjust enrichment. You would be unfairly, unjustly enriched because the tax was not paid out of your pockets, but now you are getting the benefit of it. Hence, this should not happen. That is where the entire case is. Now, I have a very interesting question by Hemant. Sir, if part of the duty is passed, now he has also explained this, how part of the duty can be passed, because it may happen that you may have imported 100 tons and out of which only 80 tons are sold, 20 are lying in your stock. So in this particular case, Hemant, as per the law, there would be two applicants of refund. One is me for the balance portion of 20 tons, which is lying with me in stock, and 80 tons, which let us have sold to you. You are the person entitled to claim refund for that 80 tons. So we both will apply for the refund for the portion of tax duty burden which we have suffered or which we have borne. Now, in this regard, what does the law provides? Only in following situations, the amount of duty and interest, if found refundable, will not be transferred to the consumer welfare fund but will be paid to the applicant. Now, if you remember, I had explained this at the start. Key firstly, government cannot retain is because of Article 265. And you are also not entitled to retain it because you have sold the goods. So, principle of unjust enrichment does not allow you to get the amount of duty back as refund. And let us say the buyer is not traceable. In such a case, where will the amount of refund go? The law says it will go to the consumer welfare fund. Now, here what we are going to study is when will the amount of refund not go to consumer welfare but will be paid to the applicant. So when will you get the refund and not the consumer welfare fund? That is what we are going to discuss. This is a very important question for your exams. The question is, when will the amount be paid to the applicant and not transferred to the consumer welfare fund? First is very simple. Where the importer or exporter has made the application, then the simple point to be checked is, have they passed on the duty incidents? Now, when will they get the refund and the amount will not go to the consumer welfare fund? When they can prove, and it is again their burden, their responsibility to first prove that they have not passed on the incidents. If they are able to prove this, that they have not passed on the incidents, in that particular scenario, the amount of refund will not be transferred to the consumer welfare fund, but would be paid to the importer or the exporter. Second, if you can simply prove that, see, the imports which I made were made for my personal use, chapter is closed. See, if it is personal use, it means it is only me who has borne the duty burden because I am the consumer. I am not selling it. So as an importer, let us say you and me have ordered something online and it has come from US. Now, because of these online portals, you can order anything from anywhere. It has come from China. It has come from Korea. It has come from Brazil. There are so many countries with which these all online portals are having their connects, and they are getting your goods directly cleared from the customs delivered at your home. In such a case, the point is where you have imported and you can simply prove one thing. Ki, see, these are the personal headphones which I have imported. This is a particular type of a system which I have imported and it is my personal use. You can see I'm using it for my own use. It means, see, personal does not means it should be not used in business. It may be used in your business, but the point is you have not sold it. It is kept with you. You are using it for yourself or in your business. In such a case, it is obvious that the duty burden has been borne by you. So by default, refund will be allowed to you. Next, now the second scenario is where the buyer is making application. So buyer has to prove, ki, sir, see, this was the quantity imported by Mr. Vishal, like what I was explaining you, 100 tons, out of which I have bought 80 tons. This is the invoice which Mr. Vishal gave to me. And this is the price which I have paid to him. And anyways, he is not filing the refund application for the 80 tons because the law has presumed under section 28D that Vishal has passed on the incidents. He also agrees to that. So now I have come to you because I have got to know from Mr. Vishal only that these goods are actually entitled for some exemption or something, because of which the originally tax paid at the time of import was higher, excess. So I want the refund. So now what only this buyer has to prove is that he has not further sold it. That is, he has not passed on the duty burden to somebody else. If the buyer is able to prove this much, that see, now I am the end user, the goods are lying with me, I am consuming it, the refund would be given to the buyer. Then comes the case of export. Generally, in case of export, now this is interesting, export duty which the exporter has paid on the goods is generally given to the exporter as refund, because here section 28D does not applies, because here 28D does not presume that you have passed on the duty incidence to the buyer, because here your buyer is sitting in a foreign country and generally no foreign buyer would be ready to pay you your domestic taxes. One. Second, you also as an exporter wants that particular special export contract, and for that you want to keep your price competitive. So you will also not add that particular extra duty component so that your goods remain competitive and you get that particular order. So these are the various scenarios because of which the law says that if it is the refund of export duty, in that particular case, generally will not have a problem. Specifically, now here are a very special scenario is covered. It says that especially where these goods have been returned to the exporter. Now, this is very interesting. So, exporter had originally exported, and now the goods are returned back to the exporter. If this is the scenario, there is 100% guarantee that no duty incidence has been passed, for the simple reason that if the goods have been returned back, there is no question of duty incidence being passed. Hence, in case of exports, wherever the goods are returned back to the exporter, the refund would apply to the or be entitled to the exporter. Next, where you are entitled to duty drawback. Now, duty drawback is a very special concept which we are going to study in further chapter. Duty drawback is similar, or it sounds similar to the concept of refund, but there is a difference. Refund is of the duty which you have paid on that particular import or export. Drawback is applicable when you are exporting what you had originally imported or purchased by paying duty at the time of import or at the time of purchase. And those duties which were paid at the time of import or purchase are embedded in your export, and that duty of import or of purchase, which may be even local taxes, you are claiming once you have exported the goods. So basically, duty drawback is a type of export benefit, that when you are exporting goods, we want to promote export, for which we are giving different types of incentive, or the domestically procured goods which are now exported, for which I am going for drawback. Now, in this particular case, they are saying that whenever the amount relates to drawback, we will not check the concept of unjust enrichment. We will directly allow you refund. So in short, for drawback of duty, which is applicable in 74 and 75, there are two different drawback sections. One is where there is trading, one where there is manufacturing. For both these sections, the drawback would be applicable, and you would be getting the amount of drawback without applying the principle or doctrine of unjust enrichment. Then the next point says that there may be certain specific category of applicants which are notified by the central government, for whom the refund will always be given to them and it will not be transferred to the consumer welfare fund. Generally, these includes trust, these include government organizations. So wherever they are applying for refunds, they are presuming that here duty incidence is not passed, and hence they are always getting the refund. Next, if the duty paid in excess by the importer before an order permitting clearance of goods for home consumption is made. Now, what is this? So let us say I have paid duty, and before I am clearing the goods, I find that there is some pilferage. Now, if you remember under section 13, when we were in the initial chapters of custom law, we read a concept called as remission of duty, which was under section 23, whenever the goods are lost, destroyed, and also whenever the goods are pilfered under section 13. Now, let us say it happens that, see, your goods have come by ship They have been unloaded. They have gone to Pro Trust. You did not go and check. You made self-assessment only on the basis of document. Let us say 100 tons were imported. You made assessment for 100 tons. You paid the duty. Now, before these goods are cleared, when you go and check the goods physically, you find that the goods are only 98 and not 100. 2 tons have been lost either by way of any type of theft, etc., all pilferage. In such a scenario, this particular point says that whatever excess duty payment is there, and obviously it is evident from bill of entry or in case of any other document which reflects duty payment, in that particular case, again, since here, see the logic, here you are claiming the refund before the goods are finally cleared. So there is no question of duty being passed on because you yourself have paid the duty and you are still yet to get the goods. So how you have passed on the incidents because the goods are still with you, you are yet to take it from the customs. So if before clearing the goods, you find that any amount of duty is refundable, for which I gave you a practical example that is of pilferage, etc. In such a scenario, you will get the refund and the amount will not go to the consumer welfare fund. So students, these are the scenarios in which the law provides that we will not transfer the amount to the consumer welfare fund. Rather, we will pay the refund to the applicant. Please go through them once again. See if anything is not understood or clear to you. Please feel free to ask. Any doubts with any of the pointers? Hemant, Jeannie, Mamta, Vignesh, anybody? Any doubts? Hemant is asking, is there single notification for point F? But I already gave you example. For many government organization, like let us, I'll give you a simple example. Let us say ISRO is importing something. So their name is put in that particular notification. Okay, tomorrow, if there is any exemption or any type of relaxation available because of which refund becomes eligible, ISRO should get the refund for the simple reason that ISRO is going to use it in further own use only. There is no question of exporting it or selling it to somebody else. So they have notified many types of government or government owned managed organizations where the refund would be allowed to them and it will not be transferred to consumer welfare fund. There are multiple notifications, Veda. See, remember one thing. There cannot be a single notification. Why? Because today they felt that, okay, this particular, let us say, Ministry of Health has come to them that, okay, we want our these organizations to be notified. Tomorrow some defense comes, tomorrow railways come. So there is no a single notification. Different notifications have come different point of time for different class of applicants. Yes. First, it applies to the government itself that if any amount is eligible as a refund, the government in the first place cannot keep it. It is backed by Article 265. And then once the government cannot keep it, the second person is we. But within us also, we have to prove that we have not shifted the burden. Now, when the burden will be shifted, only when the goods are sold to somebody and we have recovered the amount of tax along with our price. Now, generally, this depends upon your costing formula that whether you are including the basic customs duty in your costing. Now, let me inform you, if you have studied costing in materials chapter, this point is already there. This is in fact specifically written that whenever you are doing costing for materials, there are two types of taxes that you may pay at a time of purchase of materials. One, for which the credit is allowed, like the GST. Two, for which credit is not allowed, that is like the basic customs duty, or for that matter, any other local tax for which there is no credit eligible. Now, in such a scenario, materials chapter of costing, if you remember in Inters you would have studied, has already said that the costing principle says that the cost of material will include all those duties and taxes, whether local or whether any type of paid at the time of purchases or imports, for which no credit, no drawback is eligible. And basic customs duty comes in that category where you are not allowed any, what you say, credit of that under GST law or even the customs law. Yes, there may be refund applicable, eligible in the form of drawback, but other than that, generally there is no other benefit for the customs, and that is why Section 28D, which we studied above, has made a statutory presumption that since it is not going to be refunded back to you or given back to you in the form of any type of credit. Hence, we presume that whenever you are selling the goods to anybody, either in the same form or after doing some processing or manufacturing, applying the costing principles, they are presuming that the incidence of the duty, burden of the duty, you have passed on to the buyer. Now, in this particular case, if the importer exporter makes the application and if they receive the refund, they will get enriched, which is against the principle of unjust enrichment. And hence, you have this doctrine or principle of unjust enrichment, which simply says that no person should be enriched at the cost of others. So it should not happen that somebody else is paying and you are getting that money, because then it will be unfair, unjust. Further, wherever there is excess collection of duty, the refund is to be given only to the person who has borne the duty and interest, if any. Right? When the person who has applied for refund is not the person who has borne the burden of duty, the refund will be transferred to the Consumer Welfare Fund. So if the applicant is not the person who has borne the duty, in that particular case, the refund cannot be given to applicant. And if the actual person who has borne the burden is not traceable, in that particular case, the refund would be given or would be transferred to the Consumer Welfare Fund. In terms of Section 27, the importer or his agent or the buyer who has been charged the duty of import, who has been charged the duty by the importer has to prove that he has not passed the burden of duty to another person. And so in terms of Section 27, the importer or his agent or the buyer who has been charged the duty by the importer has to prove that he has not passed the burden of duty to another person in order to be given the refund. Since 28D creates a statutory presumption that he did not pass on the burden of duty, this presumption has to be refuted by providing the contrary. So all this we have discussed. I'm just reading out from whatever is given in the module. If he succeeds in this, the claimant is given the refund in terms of 27(2), etc., etc. Fine. Now we come to that landmark judgment which brought in this concept. So students, originally there was no such concept in the law. Today also you will not find these words unjust enrichment in the law per se. Yes, through all these provisions of refund, ultimately the principle of unjust enrichment is, you can say, is visible, but these words like unjust enrichment, etc., is not used in the law. This particular principle was first highlighted by the Honorable Supreme Court, and that also a 9-member bench in Mafatlal Industries. So Mafatlal Industries, you can say, is the mother judgment creating this particular concept of unjust enrichment. So what it says, the landmark judgment on refund is by the 9-member bench of Honorable Supreme Court in Mafatlal Industries versus UI. UI is Union of India. Though the judgment is from the erstwhile Central Excise Law, the principle laid down in this judgment are applicable to all indirect taxes. Now let us understand what are the principles given. Here there are some very important pointers which we need to understand. First, the question is, can this principle of unjust enrichment be challenged on constitutional grounds? Now, as I said, in litigation, either we contest on the basis of interpretation of law or we contest by challenging the law itself. Here, many times, it may have happened that this particular provision or theory of unjust enrichment itself can be challenged by some importer stating that this theory does not apply to us. So, for this, the law laid down by Honorable Supreme Court in this landmark judgment says that you cannot challenge this constitutionally. In other words, this concept of unjust enrichment is constitutionally valid. However, the theory now the other side of this what? Conversely, the manufacturer would be unjustly impoverished in case of demand has not been agreed to. Now, this is very interesting. See, this is playing with the words. Hemant, I'll just come to your point. Uh, this is a beautiful language playing with the words. So, one is theory of unjust enrichment. They have said that it is valid. Means what? That whoever is applying for refund has to prove that they have not passed on the duty incidence burden to anybody. That is unjust enrichment principle. Now, can it be applied the other side? That whenever, let us say, a manufacturer has sold the goods at 12%. In future, a demand is raised by the department saying that no, no, your classification was wrong. The correct classification is 18%. Now you have to pay the balance 6%. Now, can the manufacturer say, no, no, sir, see, I have already sold these goods. Had I known this before, that this is not 12, this is 18, I would have collected the entire 18. That is, I would have paid the correct tax. The goods are liable to duty at higher rate. So mainly it is either a valuation issue or a classification issue. In such a case, can the manufacturer, can the seller, so this applies even in GST, can the supplier says, okay, sir, I agree that, okay, it was not 12, it was 18, henceforth I'll pay 18. But you don't ask me duty for the past period because now the goods are sold. They are not with me. And even if you want duty, you go and collect it from the buyer. Don't collect it from me. Because if you collect it from me, I will be opposite of unjust enrichment. I would be unjustly impoverished. Can a manufacturer take this? So first, they have said that unjust enrichment is valid. Second, they have said that unjust impoverishment concept does not apply in taxation law. Means if you have charged lower tax or at wrong value and tomorrow any demand is raised, you as a supplier, you as a manufacturer are the only person liable to pay the difference. We will not apply the concept of unjust impoverishment. Students, I hope you have understood this. So somebody today may go into the court saying that, okay, like how you are applying unjust enrichment, applied the other way around. The courts have already said that the other way around theory is not applicable. So you have to pay the differential tax out of your pocket and also along with interest and penalty. Fine. Section 27 Customs is a self-contained code for refunds. Resort to civil suit or writs is not permissible unless the taxing code, there is nothing that can be added or deleted from it. You have to follow it. So the general theory laid down in certain judgment of both the Honorable Supreme Court and the High Courts is that the refund could be claimed within 3 years of discovery of mistake has been disapproved. If you remember, I was discussing on this, that there are multiple judgments which have challenged that 1 year time limit is wrong. It is unconstitutional. So there are multiple judgments of varied high courts and even the Honorable Supreme Court which have said that you cannot take such a stand. You cannot challenge the 1 year time limit. Now, interestingly, somebody will ask me, sir, why here 3 years is given? Because I'll just inform you, student, there is a concept or not a concept. There is a law called as the Limitation Law or the Limitation Act, which says that in general, for recovering any outstanding, the time limit for recovery is 3 years. So if you want to recover any outstanding, you can recover it up to maximum 3 years. After that, recovery is time barred. Now, many people, even in GST law, we have such cases where people have gone to the courts stating that why you have put 1 year time limit, you should at least allow us 3 years. That is, they are trying to bring in the limitation law into the GST law or here into the customs law. So honorable courts have made it very clear that those provisions of Limitation Act, let me tell you, it is Section 5 of the Limitation Act, which provides for the 3 year time limit, will not apply to taxation laws like GST or customs where the specific time limit for any action is provided. So where the law has already provided you with the time limit, there is no scope for bringing in limitation law or any other law time limit here. So that has been disapproved, disregarded. I hope this point is also clear. So first point was unjust enrichment is valid, but unjust impoverishment is not applicable. Second point, time limit is compulsory because the refund provisions are a self-contained code. Until and unless there is some striking down of the law, you have to compulsorily follow it. There is no relaxation in that. Now the third point, unless the levy is struck down as unconstitutional. Now we are talking about the levy. So the custom duty levy that you have paid or any type of anti-dumping duty or safeguard duty you have paid, until and unless that is struck down by the court as unconstitutional, all courts must exercise jurisdiction in terms of 11B of the Central Excise and refuse to grant relief if the incidence of tax has been passed on. In simple words, again 11B is refund, it is of excise. It simply says wherever your duty incidence has been passed on, we will not listen to anything. We will not allow you refund. So no courts will exercise any type of jurisdiction, that is, they will not provide you any relief. Once the duty incidence is passed on, no relief can be given in the form of refund. You will not get the refund. And that is very logical. Now, see, something which you have passed on, how can you ask it from me? Let the buyer come and ask, I will pay the refund to the buyer. I will not pay it. Next, whatever amount is collected as duty will have to be paid to the government. Now, this is important. So let us say I, as a supplier, as a manufacturer, as an importer, has collected from my buyer something by the name tax or duty. Even if it is wrong, even if it is excess, I will have to first deposit it with the government and later on I can go and ask for refund, etc. But I cannot adjust it by myself that, okay, I have wrongly charged extra. Let me myself adjust it against something else. Answer is no. So point is, this is also very important, where you charge any amount in your invoice, claiming it to be some type of tax or duty, even though the amount charged by you is excess or wrong, you have to first pay to the government. So first pay it and then again you go and claim refund if you have not passed on the incidents. But if you have charged in the bill, anyways, the incidents has been passed. So the point is, the fourth point, that is point D, says that you should first deposit it with the government if any amount is charged and collected by you in your invoice, in your document by the name tax or duty. Otherwise, it would be like cheating, it would be like fraud, that you want to take more money from the people and maybe the buyers may not be so much aware of the correct rate. So you are purposefully showing higher rates so that you can collect more amount, but to the government you'll pay the correct tax. That is not allowed. So if you have collected any amount by the name tax or duty, you are bound by the law to deposit it with the government in the first place. So these are the four important points which we get from the very famous landmark decision of Mafatlal Industries. There is one more very commonly referred decision, that is again the decision of Honorable Supreme Court in case of CCE versus Allied Photographic 2004. It says that it has held that doctrine of unjust enrichment applies even where duty is paid under protest. Now see, we had a relief in the above pages where we were dealing with time limit. That wherever duty is paid under protest by you, the time limit of 1 year does not apply. So that is a relief given to you, that is a relaxation given to you. But at the same time, what is made clear over here is that if the duty is paid under protest, still the principle, the doctrine of unjust enrichment applies. That is not a relief. That is not an exception. Which means that even if you have paid duty under protest, and tomorrow when you win that particular matter, or the department accepts your stand and says that, okay, this duty is not payable, and you already paid under protest, so refund is eligible, but still you will have to prove to the department that it was paid out of you from your pocket and you did not recover it from your customer, your buyer. So the doctrine of unjust enrichment continues to apply to cases of duty paid under protest as well. Then comes the exception to doctrine of this unjust refund. As we know, exception means what? Where this doctrine will not apply. In simple words, where you will be given the refund and it will not be transferred to consumer welfare fund. Now, these are the cases which we already discussed above. What are those cases? First, drawback. Then export duty as specified under 26, duty and interest on imports made by individual for personal use, duty interest borne by such other class of applicants as the central government may specify by notification, and the duty paid in excess before the order of clearance has been made. So these are all the cases which we studied above also. These are listed out here as exceptions to doctrine of unjust enrichment, which simply means that in these cases, you will get the refund. The amount will not be transferred to consumer welfare fund. Fine, students. This is a simple theory question. State briefly with reference to provisions of 27 of Customs Act whether principle of unjust enrichment will apply in case of refund of excess duty paid on a car imported for personal use. So we just read about that when any goods are imported for personal use, the unjust enrichment principle will not apply. In other words, the refund will be result is that yes, you are the person who are entitled to this refund. Now the question is whether you will be given refund only of the duty component or whether now can you also demand interest. So here interest is not the interest which you already paid and now you are demanding as refund. Here the interest is interest on the late payment of refund. Section 27A provides that where you are given refund after 3 months from the date of you making the application along with the complete set of documents. If you are not given refund within 3 months, or in other words, refund is given to you beyond 3 months, then the government will be paying interest at the rate which will be between 5 to 30. And presently, the rate of interest which is fixed for the purpose of giving you interest on late refunds is 6%. This interest is fixed wide notification number 75/2003. Is this clear to all? Now, there are some important points in this. The interest is to be paid for the period beginning from the date immediately after the expiry of 3 months. So let us say today I make an application and my application firstly has to be complete with all document evidences and whatever forms and whatever uploads I have to do. So let us say I make the application on 1st of November and my refund is passed on 31st of March. Now November, December, January. 3 months is anyways the cushion given to the authorities to pass and process the refund application. Now, November, December, January, these 3 months we will exclude. February and March. These are the 2 months for which I will be entitled to get the refund. So, sorry, not refund, the interest. So the interest is to be paid for the period beginning from the date when immediately after the expiry of 3 months from the date of receipt of the application till the date of refund. So in my case, since refund was paid after 5 months of making application, first 3 months we will exclude. So you will get interest for the last 2 months. For the purpose of payment of interest, the application is deemed to have been received on the date on which the complete application along with all the relevant documents as acknowledged by the proper officer of the custom has been made. So if your application is not complete in the first place, the 3 months trigger timer will not start. So it will start only when your application is complete. Now, where any order of refund is made by the Commissioner Appeals, Appellate Tribunal, National Tribunal against an order of the Assistant Commissioner, Deputy Commissioner, the order passed by the Commissioner Appeals Tribunal, National Tax Tribunal, or court as the case may be, is deemed to be an order for the purpose of payment of refund or delayed. In other words, in cases where no refund claim has been made, if a result results from an order passed by the appellate authorities mentioned above or by any court, refund is to be paid within 3 months of the order and the interest will start computing after that. Means, so where now your refund triggers on the basis of some court order. So as I was giving you example at the start, you had gone into court challenging some order of the department, and on the basis of the order of the court, it is now proven that the department order was incorrect. You are entitled to get the amount of refund. In such a case, the 3 months timer will start not from the date when you apply for the refund, but from the date of passing of the order. So this is important that in this case, the refund timer will start from the date of passing of the order. First 3 months you will exclude, and thereafter you will start computing interest at the rate of 6% per annum. The interest on delayed refund is payable only in respect of delayed refund of customs duty, and no interest is payable in respect of deposits such as deposit for project import, security for provisional release of goods, etc. So, as we discussed, you have to pay at times bonds, 3 times of duty as bond or kept as deposit something. This section does not cover interest on that. It only covers when you have actually paid the customs duty and later on it is proved that the custom duty payment is excess. Fine, students. With this, we complete the procedural part, which is provided in section 27. Anybody has any doubts? We studied the procedural part. We studied the time limit. We studied the relevant date, how to count the time limit in special cases. Then we studied the principle of unjust enrichment. We studied Mafatlal industry case. All these things we discussed in detail relating to this. And last point that we discussed was interest on late refunds, which will start after 3 months, and the rate as on date notified is 6% per annum. Any questions, students? Okay, 1 second. Hemant has a question, earlier question. There is, in fact, excess of duty, but there is no application for refund. How excess duty will? See, good question, Hemant, that you have, nobody has made any application for refund. In this case, how the excess duty will be transferred to consumer welfare fund? Answer is it will not be transferred, because until unless it is proven that there is a refund, how can even the government shift it to the consumer welfare fund? So let us say today we are paying all GST at 18%. We don't know that whether it is 12 or 18, and nobody has gone into the challenge into the courts, or it is nowhere taken up in any case that whether the rate is 18 or 12. So even if it is 12, but we are paying by 18, that is correct. It will not be transferred to consumer welfare fund. So you're right, Hemant. Until unless somebody has applied for refund or the matter has been taken up in any appeal, this particular point, whether the refund is excess and it should go to consumer welfare fund, will not arise. Next question, Hemant. Sir, there is in fact excess of duty. Acha, same question you have repeated. Fine. Great. Any further questions on these pointers relating to application, time limit, duty paid under protest, unjust enrichment? No? Okay. Now, before we go to the second part, let us take a short 10 minutes break. So 7:45, we again resume with the next part of this chapter, that is what are the duties of export and what are the duties of import for which refund is eligible. Fine, students. So let us resume after 10 minutes break. detail the procedural part along with the constitutional background, along with discussion on some very key concepts of duty under protest, then also burden of proof, and the doctrine of unjust enrichment. Now, let me take you to the more simpler and straightforward part of this chapter, that is refund in varied cases. So, first is section 26, refund of export in scenario. What it says, where export duty has been paid on the exportation of goods, such duty shall be refunded to the person by whom or on whose behalf it was paid if one. So in cases, export refund would be applicable. One, where the goods are returned back, otherwise than by way of resale. So generally it happens that when your sales have been rejected, or let us say when you had sent the goods for exhibition and all purposes and they have come back. So there is no resale. So whatever export had happened is coming back to you. Second, the goods are re-imported within 1 year from the date of exportation. Now, students, if you remember, when we were studying the previous chapters, in the initial chapter, there was a scenario where at the time of re-import of goods, which was mentioned in section 21 of the Customs Act, at the time of re-importation of goods, the treatment of the re-imported goods would be same as it applies to a normally imported goods. And over there, it was mentioned that if any goods which we had exported in the first place are re-imported, then what you have to pay at the time of re-import is the amount that you are allowed as export incentives. This was mentioned in section 21. Now, this is the flip side of that particular point. So let us say in this particular case, there was no export benefit. Rather, at the time of export, you are supposed to pay export duty. Now, in this case, what will happen if that particular amount, that particular goods are re-imported? Then, since at the time of export, you had paid export duty, at the time of re-import, whatever export duty you had paid would be given back to you as a refund. Just the condition timeline is the re-import should happen within a period of 1 year from the date of its exportation. And next, third scenario is on application of refund of such duties made before expiry of 6 months from the date on which proper officer makes an order for clearance of goods. So wherever you are applying for refund, the application has to be made within a period of 6 months. Fine. So this provision compensates the export duty in a situation where goods which are exported are rejected and returned back to the buyer. So if your goods are rejected, returned back, then within 6 months of the date of export, that is the date of order of clearance by the officer, if they are rejected and returned back, you will be entitled to the refund of that particular export duty. Now, this is slightly lengthier. It deals with refund of import duty in certain scenarios. So section 26A deals with that. It says that provided that the import duty paid on clearance of import goods for home consumption shall be refunded to the person who has paid such duty subject to fulfillment of following conditions. So there are certain conditions given subject to which whatever import duty you had paid at the time of clearance of goods, clearance means clearance for home consumption, shall be refunded back to the person. What are these conditions? First, goods are defective not as per specification. So the goods are found to be defective or otherwise not in conformation with the specification agreed upon between the importer and the supplier. However, the goods should not have been worked upon, repaired, or used after importation except where such use was indispensable to discover the defect. So what is the first scenario? So you imported goods, and after import, after payment of duty, you realize that these goods are defective or they are not as per the standards or as per the specifications given. In such cases, you may apply for the refund. Obviously, in such cases, you will be sending the goods back. But in such scenarios, you can apply the refund, but they have put some condition. The condition is that you are claiming this refund. Why? Because you are contesting or claiming that the goods are defective in the first place or they are not as per the standards or specification. Most importantly, what they have mentioned over here as a condition is that when you are resending the goods or you'll be resending the goods, your goods should not have been worked upon or repaired or used. So it means the same goods which were imported in whatever form they were imported, the same goods now you are sending back. Hence, we will be giving you back the import duty. Yes, they have carved out an exception to this, but firstly, the prima facie condition or the first basic condition put is that the same goods which were imported are recent. No working, no change in the nature of the goods. However, exception is that where such working or such processing was indispensable or it was necessary to discover the defects. Like until unless you put the raw material into the processing, you will not come to know that whether the raw material is as per quality or not. So let us say you are making some milk product. So whether the milk is of the required quality or not, that you will realize only once you have put the milk into the process and during the processing what type of texture it is getting or whether it is getting thick or not or whether it is getting curdled or not. All these things you get to know only when the particular raw material, that is milk in my example, is put into the process. In such scenarios, obviously, if some working has been done, still we will accept it and we will allow refund because here whether the goods are not as per your quality or as per your specification could be identified only after it was put to some process. Otherwise, in all other scenarios, if you want refund, it should not be put to any process. Next, goods identified as import goods. The basic condition is this only. In fact, the above condition and this are linked. See, if you want to get the refund, you have to prove that when I'm sending these goods back, why I'm sending it, one, because I'm rejecting it, why I'm rejecting it, because there are defects, and hence the above pointer had a condition that it should not be worked upon. Why? The same point you can see in point B. You should be able to identify that, yes, see, I had imported X and now I'm resending the same X. There is no change, no substitution. So the same thing which was imported, on which I have paid the duty, of which I am claiming the refund now, are the one which are now I am sending back because they are not as per my specifications or quality. Most important, now when you are sending back, it is not an export in the first place. So you should not claim any type of export benefit, specifically the drawback. So the importer does not claim any drawback. If you are claiming any export benefit, then we will not give you the import refund because already in drawback, you have taken the import duty only as drawback. So why should I give it back to you as a refund? So now when you are sending back the goods, either you take the refund because these are defectives or you go for the drawback under section 74. Both cannot happen at the same time because it will be the same thing being given to you again. That is technically, logically incorrect. Next, importer exports the goods or relinquishes the title to the goods or destroys the goods or render them commercially valueless. Now, as I said, you are claiming that the goods are not as per specification. They are not the correct goods. You don't require them. Now I'm ready to give you back the money. I'm ready to give you back the import duty paid as a refund, provided one, you send them back. Or you relinquish the goods, you don't take the goods along with you. So you abandon them. This is one of the options which we studied in the initial chapters, that instead of clearing the goods, you can abandon them. And if you have already paid the duty because you have self-assessed earlier, you can get the refund. Or you destroy the goods there itself, or you make them commercially valueless. Now, somebody may ask you, sir, how you can make something commercially valueless? So as I was giving you example of milk, if I add certain thing to the milk may be unusable. So that is what is rendering something commercially valueless. If something is patented, if I detach the patent or if I remove that particular patent because of which it cannot be commercially used, or I put a particular restriction because of which it becomes commercially unusable, then it is said to be commercially valueless. So in simple words, you have to ensure that these goods should not come into India and be used by anybody. Only then you are entitled to refund. All this has to be done in the prescribed manner within 30 days from the date on which proper officer makes the order for clearance. So if after the making the order of clearance, you realize that the goods are defective, not as per standards, and hence you want this benefit, then 30 days is the time given. However, as we all know that this timeline is very stringent, so they have further provided relaxation that on sufficient cause being shown, It may be further extended by the principal commissioner, but for a period not exceeding 3 months. Next, goods in respect of which some offense has been committed. Now, let us say you were trying to smuggle the goods and they were caught and you paid some duty and now you are trying to get the benefit of refund, that may not be allowed. So it may be noted that the provisions of this section do not apply to the goods regarding which offense appears to have been committed. So now because you are getting caught, you cannot relinquish the title. Now this is important because the simple way of avoiding the tax on the smuggled goods which you are now caught is that you are saying, okay, it is not as per my standard, so I want to relinquish it. That is now not allowed. So if you have been caught doing something which is an offense, now you don't have the benefit or the shield of this section by which you can take the benefit saying, okay, I will send it back, or I will render it commercially valueless, or I will relinquish it. No, now you have to pay the duty, the penalty, etc. Application for refund. An application for refund shall be made before the expiry of 6 months from the relevant date in such form as may be provided. So in this particular case, where in this case is that where you are rejecting the goods, you are say claiming that the goods are unfit or not as per your specification and hence you want refund. Here, the time limit for making application is not 1 year. So 1 year, which we studied in section 27, is general. This is a specific case which we are studying in 26A, that is rejection of goods because they are not matching your specifications or standards. Over here, the time limit is 6 months. Now, 6 months from a relevant date. What is this relevant date? The relevant date is in case the goods are exported. So if you are sending back the goods, the date on which the proper officer makes an order permitting the clearance under 51. So the date on which the export department allows you to load the goods and allows you the permission of clearance of the goods, that is the date within which from which 6 months would be counted. In case you are relinquishing the title, the date on which you give that written that you are relinquishing the title, that date will be considered as the date for counting the 6 months period. And in case the goods are being destroyed or rendered commercially valueless, again, the date which is noted in the customs register of the date of destruction or rendering them commercially valueless. So simple, the 6 months time limit will be counted from the trigger point. For sending back the goods, the date of export order, clearance order. In case of relinquishing the goods, the date of relinquishment, whatever you sign the document. And third, where you're destroying, the entry made in the customs register notifying the destruction. No refund in case of perishable goods. Now, this is interesting. If your goods are perishable and you did not clear it within time, because of which now obviously they have been deteriorated or destroyed or become useless, and now you are saying, okay, let me relinquish it, let me send it back, and you give me relaxation in duty, you refund me back the duty, that is not allowed. So in case of perishable goods and goods which have exceeded their shelf life, like maybe medicines or drugs, we don't call them as perishable, but after a particular date they are not fit for consumption because whatever is their shelf life has expired, even in case of many eatable items. So once any goods are either perishable, so they have perished, or if the shelf life of these have expired, or the recommended storage before use period, the refund shall not be allowed. So if you have not taken precautions in respect of such goods which are having a shelf life, which are perishable, which have some condition of storage before use, like we see in case of many of our cosmetic items, they say you should not put it in a direct sunlight, or you should not keep the lid open, otherwise it may get contaminated or it may be unusable. And if you're not paying attention to such storage instructions before use, in such a scenario, if that particular goods become useless and now you want to claim the benefit of 26A saying that, okay, I want to relinquish, I want to destroy, that benefit will not be allowed because you are at fault in the first place. The mode may my notification in the official gazette specify any other condition. So besides the above three, further conditions may be specified. Now, this is again very interesting point. Refund claim cannot be a substitute for appeal. Now, it'll say, sir, refund is one side, appeal is the other side. What is the combination of the two? So there is an interesting concept. that, let us say, if you are aggrieved by the order of the department, that if some order has been passed which is against you, you have to obviously go in for appeal. Now, can you decide to go or make a refund claim instead of going in for appeal? The answer is no. I will say, sir, when this will happen? So let us read this. So the Customs Act has separate provisions and timelines for filing appeals against an order of customs. Appeal to the Commissioner Appeals can be filed within only 60 days. Now, this is part of the further chapters where we study the procedure relating to appeals and procedure relating to other custom departments procedures. So over there, 60 days time limit is given for preferring an appeal with Commissioner Appeals. 60 days will be counted from the date of receiving the order of the officer. Now, in such a scenario, as we have already studied, on the other hand, refund can be filed within 1 year from the date of payment. But can you substitute refund with appeal? That is, where some order was passed by the department, which is against you, and now you want to contest it. You have only 60 days to prefer an appeal. If you miss the timeline, can you say that, okay, instead of that, let me claim, make an application of refund and get that amount as a refund? Answer is no. So this can be understood from this case law. In case of Priya Blue Industries, duty was assessed on the imported item. The importer paid the duty under protest. Thereafter, the importer filed a claim for refund of duty. So it seems very simple. So duty was assessed on imported item. Importer paid the duty under protest. Thereafter, the importer filed a claim for refund. Now, please understand, students, where you have paid the duty under protest, you are protesting. It does not mean that the department has accepted your stand or whatever excess duty you have paid is automatically refundable. See, the department believes, let us say it is 18%, you believe it is 10%. Example, in this particular case, you still pay 18%, which is under protest. This payment itself does not prove that 8% is excess, because the department still is of the stand that the rate is 18%. You are of the belief the rate is 10%. 8% is not automatically excess or refundable. Here you cannot directly apply for refund. In this particular case, since the department has made an assessment of 18%, though you believed it was 10%, 8%, though at the time of payment you have mentioned that this is payment under protest, still, now since the department has made an assessment which you are protesting, the only option available to you is first go in for appeals, get the matter adjudged by the appellate authority as to who is correct, whether you 10% or the department 18%. Only when the appellate authority gives you a ruling or a decision that yes, you are correct, then only the refund becomes entitled. Simply because you are paying under protest, that automatically does not entitles you for the refund. So this is what this particular paragraph is trying to project, or this particular entire discussion topic is. So what it's important I've underlined, once an order for assessment is passed, the duty would be payable as per that order. So see, once assessment is done, you have to pay duty as per that order, unless the order of assessment has been either reviewed under section 28 or modified in an appeal. That order stands. So once the department has passed an order stating that the tax is 18%, you believe it is 10%, that is your understanding. That itself will not make you entitled for refund of 8%. You may have paid that 18, in which 8% you are claiming as duty paid under protest. Fine. You want to challenge it, go in the court, go in for appeals. Let the appellate authority or the court decide who is right, who is wrong. Only then you can file the refund application. So long as the order of assessment stands, the duty would be payable as per the order. A refund claim is not an appeal proceeding. So you cannot say that, okay, instead of appeal, let me go in for refund, because anyways, when I'll file refund over there, also the officer will check over there. I will fight with him, or I'll convince the refund officer. And if he agrees, I will get the 8%. Sorry. So if one officer who is your adjudicating officer or who has done the assessment has passed the order of 18% duty, which you feel is 10%, now you can say, okay, I will make application for refund, which will go to a refund officer. Please understand the officers may be at the same level. One. Two, anyways, the law has no such provision that for assessment order, now if you file appeal, it can be compensated over there. Sorry. For assessment order, the only higher up authority which is there is the appellate authority, or the higher up authority is where you can go in for review or reassessment. There is no third option. You cannot go to the another authority which is passing refund and say that okay, that is also a department. So even if I take the matter over there and contest over there, I will directly get refund. Answer is no. So this is what is the point of dispute in this particular case, where the Honorable Supreme Court has very simply and categorically mentioned that so long as the order of assessment stands, the duty would be payable as per this order. A refund claim is not an assessment or not an appeal proceeding. The officer considering a refund claim cannot sit in the position of the appellate authority over an assessment made by the competent officer. The officer considering the refund claim cannot also review. So it means the appeal and review officers, which are higher up, are different officers. They are specifically nominated, appointed for that particular purpose. And the refund officer is a different officer who is not having any such power of appeal or any type of review. He is only having the power of refund. So you cannot indirectly challenge the order of assessment by filing a refund. This is what is the crux of this particular case. So in view of the above ruling of the Supreme Court, refund claim based on challenge to an order of assessment are liable to be rejected. So the Honorable Court was very clear that you cannot take up assessment via the refund route and challenge it over there. You have to go in for the appeal or review route only. So what are the similar judgments? So refund claim cannot be a substitute for appeal. This is what we just read. Refund claim cannot be filed by the CH agent in his own name without the power of attorney. So see, the custom house agent is only acting on your behalf, your means importer's behalf, for clearance. If there is any type of refund, the importer is the main person who has to apply for the refund. Obviously, again, the procedural part, he may give power of attorney to the custom house agent and he may do it on your behalf, but the custom house agent is not entitled for any refund. So technically, the custom house agent cannot file the refund application. Another burden of proof that the incidence of duty has not been passed on to consumer is on the assessee. This is what we studied above also, because section 28C has very categorically made it clear that in case of refund or in case of duty of customs, it is always presumed. Now, this presumption you will find in general all indirect taxes. It is there even in the GST law, which says that it is the general presumption by the law that the duty incidence is always passed on to the buyer. So now if you want refund, you have to first give evidence and prove that the burden is borne by you and you have not shifted the burden. If you fail to give that proof, the refund would not be allowed to you. Next, interest on delayed refund is payable at the rate as applicable at the time, as applicable time to time, and not at the rate applicable on the day when refund was due. Now, this is interesting. So where now we saw the refund is applicable if the application is not processed within 3 months. So beyond 3 months, you are entitled to get refund. So here there is a clarification in one of these judgment which says that interest on refund is payable at the rate. Now we saw that presently the rate is 6. Let us say over a period of time, 6 has become 9. So the question is whether you will be allowed at 6 or 9. So it says that the rate would be as applicable time to time and not the rate applicable on the day when refund was due. So let us say the refund becomes due today because of some court order, but the refund is given to me after 1.5 years. Now, in this 1.5 years, let us say after 10 months, this 6% rate has become 9%. So whether for entire 1.5 year, I'll get 6% because at the time when this refund was due, it was 6, or the entire 1.5 years will become 9% because at the time when you paid me the interest, it was 9. Answer is none of the two. So for the first 10 months, it would be 6. Thereafter, when the rate was revised to 9, for the remaining period in that 1.5 year period, the remaining period it would be 9%. So this is what it means that as the rate of interest would change, we will also give you or compute the interest accordingly. So it is same like how you get it from banks. So where in case of banks nowadays, where the bank changes the rates because the RBI has changed the repo rates, your loan interest or your saving account interest, if it is not at a fixed rate, will get changing. So wherever you have taken loan on floating rate of interest method, so the rate of interest will get revised. Similarly happens with your saving bank account. The rate may change once the RBI changes the repo rate, and hence the bank changes its own rate of interest. Same thing will happen over here. Maybe at the time of application it was 6%, but by the time you are getting interest, if in between the rate has been revised to 9, for the further period from that date, the interest would be calculated at 9%. It has been held that appeal is required to be filed and not refund claim even in respect of self-assessment. This is what we just saw. And wherever assessment has been made and you want to challenge that, and even though the assessment is self-assessment, so let us say assessment is done by you only, and later on you realize that it was wrong, you cannot directly go for refund. Either you go for appeal or you go for review. So automatic refund will not be allowed even where the assessment was made by you, that is self-assessment. I hope this particular point is clear. So we just studied 26 and 26A, which dealt with what are the different scenarios of getting refunds in case of export or import. So let us just recapitulate. So what it says, eligible person to claim refund. Eligible person is one, the person who has paid or who has borne the incidents. Ultimately, it is this person. Time limit, normally 1 year. Duty paid under protest, no time limit. Minimum amount should exceed 100. If the amount is less than 100, no refund would be eligible. Doctrine of unjust enrichment. Amount will be refundable or will be transferred to the consumer welfare fund. Again, it is statutory presumption that the incidence has been passed on, and only in specific situations you will be getting the refund and it will not be transferred to the consumer welfare fund. What are these specific situations? These are the specific situations where refund will be given to you and not transferred to the consumer welfare fund. Rate of interest, if the refund is given to you late, it is 6% as on date. And we just saw case law, it may be changing, and then the interest would be computed progressively accordingly. Time period, it is after the expiry of 3 months, from the date of application, provided the application is complete. What are the scenarios of refund? Refund of export duty. If your goods are returned because the customer rejected it. Second, goods are re-imported within 1 year, or you have made application within 6 months because the goods were rejected. In any of these scenarios, you are eligible for refund of export duty. Next, refund in case of import. It is the scenario when you purchase or imported something and you found it defective or not as per your specification, and hence either you want to send it back, or you want to relinquish the title, or you want to destroy these goods. So in all these scenarios, you are eligible to apply for refund. Condition is you should prove or you should claim this within 6 months. Before the expiry of 6 months only, this application has to be filed. Here 1 year time limit is not applicable, because if you are rejecting, 6 months is sufficient to identify the rejection. Most important, whatever you are sending back should be identified with the imported goods. So what you imported and paid duty, and now you want to get the refund of that duty, and today you are claiming that, okay, these are defective, so I'm resending it back. You have to link both them and prove that these are the same goods which were imported. You have not claimed any drawback at the time of export, because if you are claiming drawback, already the import duty is given back to you. So now you cannot claim the same duty as refund. An importer exports the goods or relinquishes the title, etc. This is what we have discussed. Most important, if these are perishable goods and you did not clear it in time, now you cannot get the benefit of 26A. Relevant date, where goods are exported, the date of computation would be counted from the date on which the proper officer makes the order for exportation under section 51. If it is on account of relinquishment, it is the date where you have signed the document relinquishing your title, and where the goods have been destroyed, it is the date which is noted as the date of destruction. So these are the provisions. Let us go to some of the questions that are expected on this. So explain the provisions of customs relating to computation of limitation for submission of refund applications. So here we have that 1 year time limit rule, and we have to explain ki how this 1 year would be counted in different scenarios, how 1 year would be counted from what date. Next, Messrs. HIL import copper concentrates from different suppliers. At the time of import, the seller issues a provisional invoice and the goods are provisionally assessed under Section 18 based on this invoice, where the final invoice is raised based on the price prevalent in the London Metal Exchange on a predetermined date as agreed in the contract between the buyer and seller. The assessments are finalized on the basis of price in such invoice. So originally a provisional assessment was made on the basis of provisional price given, but finally, as per your agreement, the final price which is decided by the London Metal Exchange, that price is decided and that invoice is raised, which is your final invoice. Now, HIL has filed a refund claim arising out of the finalization of bill of entry by the authorities. The department, however, has rejected the refund claim on the grounds of unjust enrichment. Discuss whether the action of department is correct. Now, here, one thing which is not very clear is that has importer, after import, sold these goods further. Now, we can answer this question on the basis of both the presumptions. One, he has transferred; two, whether he has not transferred. If he has transferred the goods, the question comes whether he has taken the price which is post finalization or he has taken the price pre finalization, because then that will be again the deciding factor. So I'll just go through what is the assumption given over here in the answer. So Section 18 dealing with provisional assessment incorporates the principle of unjust enrichment in case of refund arising on final assessment fine. Under subsection 5 of the Customs Act provided that if any amount is found to be refundable after finalization of provisional assessment, such refund will be subject to doctrine fine. Further 28D. Okay, so I think answer is very generic. So it is not taking any assumptions. So they have simply put out the section and it is said that therefore in the given case, the departmental action is correct if Messrs. HL does not prove any evidence of bearing the duty burden. So fine. So on the basis of the provision only, you can answer that if you have not passed on the duty burden, then you are eligible for refund. Okay. Next case, XYZ Limited imported capital goods, use them in its factory to produce goods for sale. Okay, interesting. Now see, why is this point interesting? Because now you have purchased import capital goods which you are installing in your factory. You're not selling these capital goods, but you are using these capital goods for producing your final output, which is going to be sold. Now here the question would be that whether can we claim or can the department claim that the incidence is passed on, because when you have purchased the capital goods, you would have capitalized the import duty on which you would have claimed the depreciation, and that depreciation would have been embedded in the cost. So this is why this becomes interesting. Further, let me first read the entire case. Upon discovery of an error by which excess import duty has been paid on the said capital goods, it filed a refund claim. So obviously, since the duty paid was excess, now you are going for refund. But now what the challenge of the department would be that you would have capitalized this, you are claiming depreciation, and depreciation would have been added in the cost of the final products which you are selling. So indirectly, you are passing on the duty incidence. And if you have passed on the duty incidence, there can be no refund. So as regards unjust enrichment, it contended that capital goods were not sold. So this is obviously your contention ki see, I have not passed on the duty incidence because the main goods which I imported, that is the capital goods, I have not sold, and hence the principle of unjust enrichment will not apply. If you remember, we have a list of in what cases refund will be allowed and it will not be transferred to consumer welfare fund, in which one of the cases is where it is personally consumed. So indirectly, the factory or the manufacturer is claiming ki see, since I have purchased the capital goods, obviously I'm not selling the capital goods, it means it has been consumed by me. Fine. Second, and that in any case, the price of the finished goods manufactured in the factory remained the same. Oh, this is great. Before and after importation and installation of the capital goods. So this is a sufficient proof that the duty burden has not been passed on. So as I was saying, what the department can claim that since these are capital goods, whatever import duty you would have paid on this, you would have capitalized it, which is now part of depreciation, and through depreciation, it would have entered the cost of goods. To even counter that, the importer has given the second contention. So first contention is I am not selling the capital goods, so I'm not passing on the burden directly. Indirectly also, how I'm not passing, that has also been clarified by them. It is stating that since the price of my final product remained the same even before and after, or it was the same before I purchased these capital goods, this itself is a proof that whether I have paid any customs duty on this, that has not entered my price. So this is an interesting point. So let's see how it has been answered. So the incidence of duty can be passed directly or indirectly. Where the capital goods are used for manufacture, the duty paid on their import will go into the costing of the goods manufactured and sold and can thus be passed on the buyers. How I just explained through the depreciation, it can enter your cost. Now, the larger bench of the tribunal in case of SRF Limited versus Commissioner of Customs, Chennai, etc., has held that doctrine of unjust enrichment would be applicable in case of imported capital goods which are used captively for manufacturing or excisable goods. It means what? Same thing, that even though you are installing capital goods, which you can claim that it is used by you, not sold further, still through the depreciation route, the customs component can be passed on to your buyers, because once it is capitalized, it will be allowed to as depreciation, which will become part of your costing, and through costing that depreciation would get a portion and added to the cost and price of the goods. So this is the interesting point as regards the relevance of the fact that the price remained the same before and after the capital goods. So for countering this, the importer has given this. The larger bench also clarified that uniformity in price before and after does not leads to inevitable conclusion that the duty burden has not been passed, as such uniformity may be due to varied reasons. Now see, appreciated the judgment, but remember students, two important points. We can counter this same point from the other side also, that when you are saying that uniformity of price is in itself not a proof that duty burden has not been passed on, so it can be claimed otherwise also, then it is also not a proof that duty has been embedded. One. Second, also appreciate students that this is just a tribunal judgment, at least as how it is quoted here. And we all know that above tribunal, you have the High Court and Supreme Court, and we have seen n number of cases where the tribunal judgments are reversed. So you can give this as one of the counters, but as finalist students, if I would have to write the answer, maybe below this answer, I will further add a paragraph of my own stating that, however, in my personal understanding, this can be contested at the higher forum. So you should definitely add this line, just because this, as per the facts of the case, need not be the conclusion, and especially because it is only a tribunal decision. Next, theory questions. Section 26A of the Customs provide for refund of import duties if goods are found defective or not as per specification. Discuss the conditions. We just saw them. What is the minimum monetary limit prescribed? It is 100, we know. Explain the doctrine of unjust enrichment, we have discussed in detail. So these are pure theory. You can refer the relevant part of the module again. Now, again, interesting case. Acme sales imports were being provisionally assessed pending a verification that the department was carrying out. So you imported certain goods, you went in for assessment, department said that we need to verify, maybe we want some lab reports or some further inspection, etc. You said, sir, please do that, but allow me to clear the goods so that at least I can continue my business and I will pay the duty provisionally, and in future we'll go for final assessment. So that was agreed. You cleared the goods by making payment of duty provisionally. Upon completion of verification, the assessment was finalized. Acme Sales was asked to pay further 12 lakhs, which it paid. So after final assessment, your duty liability was increased and you paid that duty liability. After 6 months, upon further detailed scrutiny of the verification report and taking legal opinion on it, Acme Sales filed a claim for refund of 8 lakhs. So this 12 lakhs which they had asked further, you challenged that, you went in for further verification, further testing, and on the basis of testing, you found out that, okay, the 12 lakhs demanded extra at the time of final assessment is not correct. It should have been only 4 lakhs. It means the 8 lakhs which are demanded are excess, which should be refunded back to you. So you filed refund for 8 lakhs on the ground that the differential amount should have been only 4 lakhs, and that there were factual errors in the verification done by the department. Fine. So these are generally how the litigation happens. Now, Was this the correct mode of redressal of for Acme sales? What will be likely outcome of the claim discussed on the basis of case law? So if you remember, we just discussed the last case of Priya. I am forgetting the name. See this one, Priya Blue Industries, where it is very specifically mentioned that once assessment is complete, now, if you feel that it is wrong, you cannot go in for refund and ask for the differential duty. You will have to go by the appeal or the reassessment route, revision route. You cannot go in for appeal. So that particular point will apply over here, that since now final assessment is made by the department, that becomes the final starting point for this particular matter. And once this is an assessment order, you cannot directly file a refund. You will have to go by the appeal route. So this is squarely following in the Priya Blue Industries case. Next case. Mr. N has over 3 consignments of 200, 400, 400, imported a total of 1,000 units of articles. So as you can see, first 200, then again 4 and 4. So total they have imported 1,000, which has been valued at 1150 per unit. The customs duty on this article is assessed at 250 per unit. He adds his profit margin of 350 and sells the article as 1750. So they have given you costing. So 1150 is the price. To this 250 customs duty, so it becomes 1400. To this 350 margin, it becomes 1750. That is how your price breakup is given. After 1 month of selling the entire consignment of the article, Mr. N found that there had been an error in payment of duty, in which duty for the consignment of 200 was paid as if it was 400. Okay, resulting in excess payment of duty. Mr. N files an application for refund. Now, please understand, students. See, they have even mentioned that you have added this customs duty. You have added at the rate of 250 per unit. But now what is the mistake? They have said that you found out later on that when you were clearing this 200 units consignment, on which the duty was correctly assessed at 250. So there is no mistake in assessment. But while making payment, you paid the duty as if the consignment was 400 because you had purchased 3 consignments. Let us assume, for understanding this case, they were lying in warehouse. So out of this, you decided to clear 200 first. But maybe while filing the second bill of entry, you wrongly calculated the tax and paid the tax as if it was the 400 units duty. So now obviously for 200 units, if you have paid the duty applicable on 400, it means virtually you have paid double. Now, Mr. N files an application for refund. So you are now filing application for refund of this double payment. So 50,000, how you have calculated on 200 units, the 250, which you have paid double. You should have paid 250, you have actually paid 500 because you have paid for 400 units instead of 200. So whatever you have paid extra for the 200 units, you are asking for refund. Now in this question, they are asking whether unjust enrichment would be applicable. I believe no, because you have added the customs duty, I agree, but you would have added it only 250 per article. But here you have paid 250 twice because you made wrong calculation because you assessed for 400 instead of 200. So I believe here you have not passed on the duty incidence. This is my understanding. Let us check. Hmm. Mr. Sen invoice shows that he collected 250. I agree. We have collected 250. We have collected in on 1,000 items. However, he paid duty on 200 units more. This payment in the normal course was made before the order permitting the clearance. It would be evident from the bill of entry that the payment was more than the amount of duty assessed. Thus, Mr. N case fall within the exception to unjust enrichment listed in clause G of the first proviso. He will be able to refute the charge of unjust enrichment. Furthermore, clause A of the same subsection provides that the doctrine of unjust enrichment will not apply to refund of duty and interest if any paid on such duty, if such amount is relatable to duty and interest paid by the importer exporter, if he has not passed on the incidence. Now, obviously, as I explained, you cannot pass on this incidence because you have passed on the incidence of 200. But while making payment, you have paid payment for 400. So here where you have made payment of excess, that excess you have not recovered from your customer. That is very obvious from the facts of the case. And hence you very squarely falls within the eligibility for refund. Unjust enrichment doctrine does not affect you. Next question. Explain the relevant dates as provided in 26A. So we already saw that the time limit is 6 months. 6 months would be counted from which date? That is the relevant date. In case of goods which are exported, it is the date on which the order of export or clearance of goods is passed under 51. In case of relinquishment of title, it is the date on which you have relinquished. And where you have destroyed or rendered valueless, it is the date when you have destroyed. So that is very clear. So that is the relevant date. Explain whether refund of import duty is allowed in case of perishable goods. Again, we have studied that is not allowed for perishable goods. You cannot claim refund, right? Because it is your mistake that you did not clear it in time. Now you cannot relinquish it. You cannot destroy it and get the benefit of refund. Briefly explain whether interest is paid to the applicant in case of delayed refund by custom authorities. Answer is yes. And we have read that rule of beyond 3 months period at the rate of 6% per annum. That is what you have to mention over here. So students, these are the different provisions. Let us go to the bare law. So this is the bare law. Let me run through this also so that you'll get an overview of how the bare law is drafted. So first is 26, refund of export duty in certain cases, where on exportation of any goods, any duty has been paid, such duty shall be refunded to the person by whom or on whose behalf it is paid if goods are returned, otherwise by way of resale, goods are imported within 1 year, and an application for refund is made within 6 months from the date on which proper officer makes. So it is straightforward, same thing we studied. Second 26A, refund of import duty in certain cases where on the importation of any goods capable of being easily identified as such with the imported goods, any duty has been paid on clearance of such goods for home consumption, such duty shall be refunded to the person by whom or on whose behalf it is paid. Now, in what scenarios it will be refunded? One, the goods are found to be defective or otherwise not in conformity with the specification. Fine, provided the goods have not been worked on or repaired or used. Again, there is an exception which says except where it was indispensable to discover the defect. Second, the goods are identified to the satisfaction of our assistant commissioner that see what I'm exporting now is the same goods which I had imported. Three, the importer does not claim drawback. And four, either the goods are exported or the title is relinquished or the goods are destroyed in such manner as may be prescribed within a period not exceeding 30 days. And again, we saw this 30 days may on sufficient cause be shown be extended by the principal commissioner or commissioner for a further period, but not exceeding 3 months. Provided further that nothing contained in this section shall apply to goods regarding which an offense appears to have been committed. Again, we saw this. This was one of the conditions given in our module. Also, that if these are smuggled goods or improperly imported goods, and when you are caught, now you want to relinquish or destroy, that will not be allowed. Next, an application for refund shall be made before the expiry of 6 months. So for these cases where you want to claim refund, why? Because the goods are not as per standards or specification, and hence you want to either re-export it or you want to relinquish the title. In such cases, the time limit is only 6 months, not 1 year. What is the relevant date for counting this 6 months? In case of export, it is the date of officer permitting the clearance. In case of relinquishment, date of relinquishment. In case of destruction, date of destruction. No refund under subsection 1 shall be allowed in respect of perishable and goods which have exceeded their shelf life or recommended storage before use period. Further, the board may by notification in the gazette specify any other condition. So the same thing we just studied, so nothing different. Next, section 27, that is a procedural part, claim for refund. Who can claim? First, any person who has either paid or borne can make an application in such form and manner as may be prescribed for such refund to the AC or DC of customs. How much time? Within period of 1 year from the date of payment. However, we saw that in case of purchaser, it will be the date of purchase. Fine. Provided that where an application for refund has been made before the date on which Finance Bill 2011 received the assent of the President, such application shall be deemed to have been made under subsection 1 as it stood before this particular date. So simply you can understand from this proviso why this proviso is inserted, because before 2011, the provisions for this particular refund were different. They have said that if you have made application before that date, and let us say the application is continuing, and in between this particular finance bill has got the assent of the president, we will deem that you have filed it as per the new provision. So in short, the old application will automatically get converted into the new application. Provided for the limitation of 1 year shall not apply to duty or interest which is paid under protest. Now, this you will not find in the GST law. So, GST law does not have any specific provision for duty payment under protest. Provided also that where the amount of refund claimed is less than 100, the same shall not be refunded. So, 100 is the minimum amount your refund application should be beyond. Further explanation. For the purpose of this subsection, the date of payment of duty or interest in relation to a person other than importer. So who is this? He is the person who has purchased from the importer. Shall be constituted as the date of purchase. So for importer, it is the date of payment. For person who has purchased from the importer, it is the date of purchase and not the date of payment. Further, subsection 1A, application under subsection 1 shall be accompanied by such documentary or other evidence, including documents referred to in section 28C, as the applicant may furnish to establish that the amount of duty interest in relation to which such refund is claimed was collected, paid, etc., and the incidence has not been passed. See, I'm now just reading this because we have already discussed the entire chapter. I just want you to go through the language of the law, and I'm sure now you'll be able to understand the law language very simply. It is nothing technical. Whatever we are studying, we have just studied from our module in a lot of detail. Here we are just going through the law language, and you'll find that there is nothing technical in this language. Save as otherwise provided in this section, the period of limitation of 1 year shall be computed. So this is the relevant date. That is the date from which 1 year will be computed. One, in case where the goods are exempted by a special order, it will be the date of issue of the order. Where duty becomes refundable because of any judgment decree, it shall be the date of such judgment decree. Where any duty is provisionally assessed under 18 and later on final assessment is made, the relevant period of 1 year will be counted from the date of such final assessment or from the date of reassessment if you have applied for reassessment. If now relevant date point is over. Now the next part, if on the receipt of such application, the AC or DC is satisfied that the whole or any part of the duty interest, if any, paid on such goods, paid by the applicant is refundable, he may make an order accordingly and the amount so determined shall be credited to the fund. So firstly, the provision says if refund application is made and it was found that it is refundable, the first point says we will transfer it to consumer welfare fund. Why? Because the law is presuming duty incidence has been passed. But again, you immediately have a exception. What is that exception? Provided that. See, proviso. This particular paragraph, it starts with the word provided, is called as a proviso. And proviso is generally either to create additional condition to the main provision or to create an exception. Here it is creating an exception. How? What does it say? Provided that the amount of duty interest, if any, paid on such duty as determined by the ACDC under the foregoing provisions. So above the above provisions, we have already determined that this duty has been paid excess shall, instead of being credited to the fund, be paid to the applicant if the following conditions exist. So in following cases, the amount will be refunded to you and not transferred to the consumer welfare fund. First, the duty interest paid by the importer or the exporter, as the case may be, if he has not passed on the duty incidence. The first condition is you should not have passed on the duty incidence. Second, the duty or interest on import made by individual for his personal use. Third, duty incidence is borne by the buyer. So where it is not the importer, it is the buyer. You have to simply prove that you have not passed on the incidence to any other person. That is, you are the end buyer or the end consumer. Export duty as specified in 26, drawback computed in 74, 75, and the duty interest borne by such other class of applicants which may be notified. Duty paid in excess by the importer before an order permitting clearance of goods, and how? One, where such excess payment is evident from bill of entry in case of self-assessed bill of entry, or the duty actually payable is reflected in the reassessed bill of entry. So whatever is the duty payment, it is evident from the bill of entry or the reassessed bill of entry, and we know it is excess. I gave you example also when we were discussing this, how you know it is excess, because at the time of clearance, you saw that the goods are deficient in quantity. So you apply for section 13 or 23 benefit, whereby your duty amount is reduced. So whatever duty amount is reduced or relinquished, that you can claim as a refund under this clause G. Provided further that no notification under clause F of the first proviso shall be issued unless, in the opinion of the central government, the incidence of duty, etc., has not been passed on by the person concerned. So we are talking about this clause where the government can notify a class of applicant who will be granted refund. For this, they have put this restriction. Here, this restriction is putting restriction in the form of condition. What is that? No notification under this clause shall be issued unless, in the opinion of government, the incidence of duty has not been passed on. So only where the government is satisfied, like in case of ISRO or railways or any other government department, they do not pass on the duty incidence because they are using themselves, maybe for government or for public benefit. They will put these names in the notification and they will be getting refund always. Notwithstanding anything to the contrary contained in any judgment, decree, order, or decretion of the appellate tribunal or the national tax tribunal or any court or in any other provisions of this act or the regulations made thereunder or any law for the time in force, no refund shall be made except as provided in subsection. So in short, whether anything is given in any judgment, it makes no difference. We will allow you refund only in the above cases. That is where you can prove in those clauses up to G that you are entitled to refund and you have not passed on the incidents. So even if in your particular judgment, whatever the court says, whether the judgment says that yes, duty is refundable, accepted. We are not going against the judgment. We are not saying that we will not refund. But the point is the judgment is only saying duty is refundable. But it will be refunded only when you prove that there is no unjust enrichment. So this subsection 3 makes it very clear that whatever judgments would be passed, even by courts or by tribunals, it would be only saying that whether you have paid excess duty or not. That is whether a refund is eligible or not. Even though they are saying refund is eligible, that does not mean that you do not have to pass the unjust enrichment test. That test is compulsory for all cases, even in cases of refund by way of judgment, because all these cases of judgment would be only saying yes or no for refund, but they are not testing always your unjust enrichment. That will be tested independently. Subsection 4, every notification under clause F. Again, clause F is what? Where the government wants to notify. Of the first proviso to subsection 2 shall be laid before each House of Parliament if it is sitting as soon as maybe after the issuance of the notification. And if it is not sitting, within 7 days of its reassembly. So since in this clause, the government is empowered to put the names of certain applicants who will always get the refund. See, government is not the law-making body. But when immediate action has to be taken, the government has been delegated the power. So using this power, the government has first passed the notification, giving a list of 10 people who are eligible for refund under clause F. However, once the government does this, it has to lay this notification before the parliament for its approval. If it is in session, and if the parliament is not in session, that immediately within 7 days after it reassembles. So let us say right now there is no parliament in session. They will assemble somewhere in December for the winter session. At that time, all the notifications which are passed in this period will be put in front of the parliament for their final decision. And the central government shall seek the approval of the parliament to the notification by a resolution moved within a period of 15 days, beginning with the date on which the notification is so laid before the House. So firstly, there is 7 days for laying the notification, and after laying the notification, they have to get the approval within 15 days. If the parliament makes any modification in the notification or directs that the notification should cease, so either they accept, they reject, or they modify, the notification shall thereafter have effect only in such modified form, or where they have rejected, be no effect, as the case may be, but without prejudice to the validity of anything previously done. So let us say government passed this notification in October, Parliament started in December. Within 8-10 days, it cleared the notification, no problem, everything is ratified. Same example, government passed the notification in October. It got clarified in on 15th of December that okay, you said that these 10 people are eligible, but I am removing 2 people, only 8 are eligible. So these 2 will not be eligible, but not eligible from 15 December onwards. Whatever has been done between October to 15 December cannot be changed. This is important, but without prejudice to the validity of anything previously done. So from October to 15 December, whatever government notification said, that is valid. Thereafter, whatever parliament has modified, rejected, that will be valid. This is what it means. For the removal of doubts, it is hereby declared that any notification issued under clause, again same notification where the government will notify the claimants who will get refund. So any notification issued under clause of the first proviso to subsection 2, including any such notification approved, modified under subsection 4, as we discussed just now, may be rescinded by the central government. So this is again interesting. So government passed a notification, it went to parliament, parliament made some changes. Now the government is not happy with the changes. The government has the power to rescind the notification at any time. So it may withdraw the notification because now it do not want the notification to apply in the modified form. So government is given this power that if the parliament has modified, made any changes to the notification, it may cancel. Rescind means cancel the entire notification itself. So nothing will apply. So that power also is given. Next comes the interest portion. So if any duty or order, if any duty order to be refunded under subsection 2 of 27 to an application is not refunded within 3 months from the date of receipt of application under subsection 1, there shall be paid to the application interest at such rate, not below 5, not exceeding 30. So this was the range given, but it is 6, we all know, as is for the time being fixed by the central government by notification in the Gazette. On such duty from the date immediately after the expiry of 3 months from the date of receipt of such application till the date of refund. So the period for computing interest is after 3 months till the date of refund. Provided that where any duty ordered to be refunded under subsection 2 of section 27 in respect of an application under subsection 1 of that section made before the date on which Finance Bill 95 receives the assent of President is not refunded within 3 months from such date, there shall be paid to applicant interest under this section from the date immediately after 3 months. So what does this point says? See, this section or this particular interest provision was introduced by Finance Bill 95. So if let us say somebody has applied for refund before 95 Finance Bill date, but received the refund thereafter, they say that obviously again the new provision will apply. So they will be paid interest under this section from the date immediately after 3 months from such date till the date of refund. So in simple words, even though you applied for this before the finance bill, but if it is finally given to you after the finance bill, you are entitled to interest. Explanation. Where any order of refund is made by the Commissioner Appeals Tribunal, National Tribunal Court against an order of ACDC under subsection 2 of section 27, the order passed by the Commissioner Appeal Tribunal, National Tribunal, or as the case may be courts, shall be deemed to be an order passed under that subsection. Fine, it is clarified. Yeah. So that is the end of this, students. So we have completed the entire refund chapter completely from module, discussing all the questions given at the end, and also looking at the provisions from the bare act with the entire act verbatim. So now I invite your queries, doubts on this. You may unmute and ask your questions. You may put in the chat box. Yes, students. Anybody has any questions, doubts? Which clause 4, beta? You're saying which clause 4, beta? I'm not getting. The procedure under clause 4 is applicable to all acts. Acha, here, this subsection 4, yes, that is applicable to all, generally. So, but all acts, see what happens. See, there is one difference. In GST, anyways, everything is first discussed by the council and then it is passed or brought into the parliament. So generally, this particular point you will not find in GST, but yes, in customs, this is there in many of the chapters. So I will say it is not there in all the acts, but it is there in all the chapters of customs because customs and the earlier excise are such acts beta where multiple provisions were delegated to the government. So the government was a delegated authority where the government was given this particular power to take certain actions on its own and later on get it ratified by the parliament. So you will find this particular subsection 4 point that one where it is. Yeah, this one that you have to get it approved from the parliament. You will find this in all chapters virtually of customs law. And this was also similar in excise, but it is not that it is there in income tax or in GST because over there you have very less delegated legislation. See, all this applies wherever there is a delegated legislation where the act has given the powers to the government to do something what the act is empowered to do till the time the parliament comes into the picture. So only in those cases such type of provisions you will find. But it is a good point that you have raised. Yes, students. Any further questions? Yes, students. Anybody has any questions or doubts? Please ask. You may ask doubts even relating to other chapters. Not a problem if there is any doubt in any of the other chapters. No doubts. Okay. So then with this, we close our today's session. Please keep reading. Revise your previous chapters also so that in case any doubts crops up, if something is not clear, either you can check the earlier recordings or you may ask directly in the next lecture. So with this, we close our today's session. Enjoy the festival weekend. And yes, please take care of yourself, your family members, and also keep studying. Thank you, students. Thank you very, very much. Yes, sir. Thank you very much, technical team.